Sell-off, kind of a Tuesday here. We are in negative territory in a big way, right across the entire board. I will show you in a second here. Big time negative numbers, though. It was the consumer confidence that came out at 10 a.m. this morning that kind of kicked off. If you remember, back at 10 a.m., it was a very positive start to the day. We came in the pre-market. We were gapping up right across the board, all markets essentially in positive territory. It was some of the tech stocks. Banks were strong as well, back in positive territory, coming off the stress test that we were talking about from the Fed that they all passed, some raising their dividend, and as a result, gave us a nice look for the banks. But there we go. Back to the downside as of right now, 1.4 for the S&P. It is the NASDAQ leading the way, 2.36. The Dow right now 1% to the downside. Crude oil, 2% higher. We'll talk about Oxy coming up here with its own news today surrounding Berkshire Hathaway, and they're buying more shares on Monday. Will he or will he not add to that today? We'll, I guess, find out tomorrow. Bitcoin and Ethereum, bottom end of the board there, 1% and 2% back in the red as well. Very red board to discuss now. It's only, as I mentioned when I jumped on with Trader Prad there, only really the energy sector providing any kind of lift for the market right now. Qualcomm we'll touch on coming up here, still 5.3%. This is LVS and Win, higher on the Macau news, China reopening. More restrictions lifted today in China, including those surrounding some of the hotels and casinos. So good look for them. Everything else, though, in the tech group up here in the red, big time. Software names leading, semiconductors outside of Qualcomm leading to the downside. I wanted to point out the retail names down here. We'll talk about Amazon, but Etsy, Best Buy, Home Depot, Lowe's, Ross Stores, all 2 to 4% negative territory. One of those days, unfortunately, big kind of a reversal type of a day. Hope your afternoon is going well. Hope you didn't hold too much on the way down this morning. We'll jump into a few things we were looking at heading to the open this morning. If you joined us in the pre-market, Neil is here. Yeah, Sean at his son's graduation this afternoon, so we wish him well. Neil is here. He's going to lead us this afternoon with a look at one of his trades.
Okay, we're going to talk trade of the day here. It's going to end up being Disney. And sometimes it's not about picking the biggest winner or the biggest loser. It's the best learning experience. I say this over and over again. There's no chance anything provided me a better recap or analysis than Disney. Because in a weak market like we've had today, selling off like this, sometimes relative strength is good. But I was saying it all morning long, that even the strongest name, or relatively strong name, is not going to get going without the help of the market. But I didn't really heed my words well enough. Now, first things first, always going to start with the higher time frame. I have the 60-minute chart up here. And Disney, it was just sitting in this nice consolidation and finally breaking out of its bottom channel, taking out this 99.25 level at the open, and then getting up into this 100 half zone where it looked like we had room to 103. So the context here was reopening back in Shanghai, positive catalyst, travel names looking good, the casinos were looking good, Disney was lumped in that group, and just strong all morning long. Now, what we actually end up getting, no real dip buy opportunities at the open. Sometimes we do favor those. I'd have been involved if we had had it, but it was a simple, clean break of that 99.25 level at the open. We take the breakout trade right into 100. Said to myself, actually was mentioning this, I'll take this out in front of 100 with the anticipation that at 9:30 you tend to get that whipsaw action, and we'll get back in when it does that whole rug pull. Now, there were some dark pool prints down here. It did not print down to 96, obviously, but it did come down and give you a re-entry point at about 99.35. I wasn't fast enough to get it because I was too busy getting run over in Nike at that particular time. But I did end up getting back in when it broke 100. You can think of this as one trade. You can think of it as two trades. Really almost irrelevant. Of course, we're the same trader here. It's not like I'm putting this on in some separate account. So really it is one overall trade playing that trend. Once it got to 100, the market started putting a turn. There's no question about it. You had multiple names reaching highs and turning around. Tesla hit 750, just to name one. Meta was running into resistance and turning around. Market puts in a pretty large dump. And Disney, for its best efforts, holds the high end of the channel. And it does a really good job of doing so. But every single time the market would make a big leg down, I'm taking some out in front of that high. It manages to hold support right where we like it. come back to that high of the day, and again the market dumps. And I get out another time, still holding on to a piece of it. Now here's where I lost sight of something. One of the things I've been saying when you have these names, sometimes post earnings, is if it doesn't break the low, there's only one place for it to go. Well, what does that mean when I'm looking at this channel and there's that 100.5? If we can't break that high in a tanking market, then there's only one other thing that can happen here. We did the right thing covering, and then also being able to get out when it tries to reclaim our 99.30 price. Yeah, I could have held through here and then got out for another winner. Overall, we'll be up on the trade. But if it can't break the high, in that situation when the market gives it up and we reclaim that low, I should be looking for shorts. And there's no question what ends up happening once they run the stops at the breakout price, it tries to recover to the high of the day, fails at the same place, and I'm not saying you're going to get the short at 100 in this situation. I'm not saying you're going to get at 120 or the perfect entry price, but there's really no excuse for not having it back here at that 99.35. It's pretty obvious. When you have a situation like this, you have an obvious price channel that you are honed in on. When the market respects that price channel like you think it will be, and you get a massive turnaround like this to the downside, then you have to be willing to adjust your focus, go away from your bias, and understand that we're headed down today. And then therefore you need to use your price levels to work into a short position. Because if you didn't do it at the start, you were essentially chasing it $1.50 later. Now I'm up on Disney today because, hey, I liked it long and it was holding up relatively strong in a tanking market for quite some time. And we took profits when the market looked weak. But at the end of the day, there was a huge short opportunity on Disney when the market flushed because at some point, and I said it myself, I just didn't follow through by taking that short position. The first step, of course, is covering your losses and not getting married to position. But the second part about it is asking yourself, if I was flat, what would I be doing right now? And the obvious answer is going short. Missed opportunity there on Disney today.
It was a huge move on a lot of these, including Disney this morning. Guys, if you were joining us in the pre-market, we were talking about the Shanghai story with Disney as well. Remember, coming up on Thursday, the theme park in Shanghai reopening after the resort itself did last week. Trying to find that word. There we go. That's the link to the watch list, guys. Disney on the watch list this morning. So much more. We'll get into a few others that we were discussing. I want to mention Qualcomm, though, right out of the gate. Before we do that, actually, hold on. We have a very important guest to join us this afternoon in place of Sean. It is typically a segment. Today, guys, it's going to be the entire afternoon. Tuesday with Tony.
Always a pleasure to be back. Thank you guys so much for having me again. Oh, it's a crazy day today. Glad I'm here. Yes, Qs today down 2.5%. Now S&P down to 1.5%. It's a massive reversal day coming out of last week, where we had a 3.5% move, I believe, on NASDAQ to end last week off. But this week looks like a massive reversal heading into the close of the month. So far, I'm trying to find a reversal play on the Qs, but looks like we're just not having it at the moment. Another stock I know a lot of people have been looking at today, LYT. This stock's down 84%. In a trading session, which it's quite incredible. I'm not quite sure what this company is. Haven't really heard of it prior to today. From the research I do gather, it seems to be some sort of a streaming company from Mumbai, India, I should say. And well, after the IPO, it pretty much jumped 1,000%, and today it gave up all its gains. I've seen quite a few stocks act like this, I think, in the past with. I think just a few other names. I wrote a list of them. BWV, Blue Water Vaccines, another name from the past. EJH, a Chinese name. SOPA, SOPA. I believe that was also a name out of East Asia. SNTG, PETS. HUD, I almost try to pull something like that. And then we have OSU, AU as well, Austin Gold. So these are just a couple of names, $4 IPOs, rockets several 100%, and then crashes just like 89% in a single day. So I think that's what we're having over here with LYT. I'm trying to do a quick scalp at the moment. Looks like we found a bottom at around 540 if I remember correctly. Now we're trying to go back to the upside, 40% up from the bottom at the moment. But again, as to how long this recovery rally would last is anybody's call, because at the moment it doesn't look look like we're going quite anywhere at the moment. This was, what, $47, I believe, at the open, and now it's all the way back to $7. I don't think this is really going to go much higher than this. This might find some stabilization at $7, but I think this just trends downwards closer to $5, $4, $3 in the next coming days, just like how a lot of the stocks I mentioned kind of are. They're just staying at around $1, $2. So careful with these names that you never heard of. Usually, companies from another part of the world usually, and surges several 100% on the IPO. Got to be careful with those names because they always end up rugging people like this. Is what you see today.
It's a trap. I don't remember which one of those four names you mentioned it was. It wasn't any of those four, but there was one lunchtime when I was trading something that halted down like 10 times in a row or whatever it was. And I was just trying to catch like little scalp bottoms, like a $4 stock. And I just sat there with really tight stops. And I wasn't even risking a lot, but then I looked back, it's like, why did I just lose like a quarter of my day on this stock it's trying to catch a bottom for a 10 to 15% move? And I was just like, paper cut. Then I was like, we came back on. If we didn't come back on at there at 10 o'clock or 2 o'clock, I probably would have continued just messing around with it. But messing around can get you in trouble. Look, you've got to stick to what is actually working. I have a long on. I had two other longs on while I was doing the trade of the day. They both stopped out. Neo stopped out there. Even Morgan Stanley, which was good, that stopped me out. We'll get to that in a second. But this ARGX, this thing it just keeps on catching the bid, baby. And the one thing I'll tell you is I haven't been short this stock once, which is unreal for me because usually I would have been trying to catch tops on this all day long, but there's been buyers galore. So I've been trying to. I really only like the long on the breakout, on the breakouts and the dips at 170. So I've been kind of holding out for when it's above 225 in VWAP. Like I didn't really do much of anything with it at $2, maybe a mistake. But this feels like it's destined to run to the high of the day. And sometimes when everything else is crap in the markets, it's these small cap, low floaters that can catch a bid going into the afternoon. But yeah, I got that. I still have some Robinhood from this morning. I don't know how that's not lower than it is. We have lots to cover here, Brendan. This market is in Dumpsville, it looks like. Not much hanging on. If you're long something and it's working, it's a small cap, it's volatility, or it's some kind of reverse ETF, that you can go long to short.
Checking on AERC, speaking of dumping, AERC halted currently downside. Not seeing a reason for this yet. My guess could be an offering, but not seeing anything on this. Yeah, just resumed there at 15, guys, but AERC making a big move.
Yeah.
Dumping in real time.
Yeah, well, I mean, I hate looking at this blind. Like, if I don't know the reason for that dump, and realistically, it had a huge double top, so it could actually just be, that it made a double top through 17, and everybody thought this thing was going to 20. I mean, I even said this morning, I'm like, oh yeah, if it gets through that double top, I don't see why you couldn't push to 20, but it doesn't. It actually rejects the high. 17.25, almost to the penny, and it could just be everybody running to the exits at exactly the same time, and then that's why you get the halt down. As we're saying that, Tesla just got right to 700. Where did we go? 701 cent just now. So 700 on Tesla, that is inbound. Everything inside my core is saying get on the bid here at like 05 or something. But you know what? Luca made a good point. It just feels like it's breaking this level, and there's not as much size as I would anticipate on that Tesla 700. So I'm kind of staying away from picking a lot of these bottoms, unless it's a relatively strong stock. But if I'd taken the scalp trade, could have already been getting some out for that first little buck here. But I feel like there's going to be a few of these coming this afternoon. I just feel like 700 is going to break here, and I might as well just try the scalp break short.
Yeah, getting real close to that 700 level. And speaking of dumping, the rest of the markets broke a new daily low. I know I got stopped out of my Qs long at the moment. I was trying to find a bottom of the index right there, but as they say, don't go against the trend because it just broke the new lows. I think I'm going to flip my position on the head completely 180 now, trying to short the Qs, see if we can go any lower as we head into the power hour of the day, or the sour hour, we shall say, if the indices just continue dumping as they are now. Looks like AERC sort of found some sort of a bottom at around the $15 range. Again, I'm not sure if some news of an offering or something like that going on, but yeah, talk about a rug pull, $17 all the way flushed down to 14.8s, 14.7s just a moment ago there after the halt
What?
Looks like we're trying to find a little bit of a rebound now, 15.5, trying to hold that level. Besides that, it's a crazy day today, as Neil is saying. It's a huge reversal for the markets from the open. Consumer confidence report released today, looking weaker than ever, at least in the past 18 months. A lot of stocks here down quite a bit today. Industrials holding up a little bit better than the rest of the technology sector. A lot of fintech stocks, with the exception of Robinhood after the FTX buyout rumor yesterday. Robinhood's still around $9, I believe, holding somewhat nicely, $8.85 at the moment. But if you look at a lot of the other names, Square down 6% today. Coinbase, 9% back at the $50 level now. What really looks interesting to me is Carvana down today, down 18%. This might be a name to short, even though it's down so much. I don't want to short a name that's already down 18%. But if you take a look at Carvana for just a moment over here, sorry, it's on New York. Keep forgetting all these tech names. You just want to put New York for every one of these, or NASDAQ for every one of these names, but some of them are on New York, Carvana being one of them. Not really a tech name, I should say, more or less a used car dealer, but down 18% today. If we take a look at the daily chart, this is a name I've been bashing for quite some time now. Look, they're having a little bit of issues, possibly cash flow. They laid off 12% of their workforce just about a month ago, I believe. So kind of following the footsteps of a lot of other these fintech companies as well. But yeah, Carvana, not a great name, at least not for today. Just had a little bit of a rebound, actually. It was at high 19s, low 20s, I believe, just 2 weeks ago, back in the middle of June, recovered all the way above 30. Today, just flushing towards the downside. We can take a look at the weekly candles for a name like this, or kind of even pull the weeklies up. This is just an ugly looking chart at the moment. When it comes to bargain plays, I'm actually kind of scared looking at some of these companies. It's like back in January, February, and March, I was thinking to myself, wow, what a great discount on a lot of these names. I want to try to get some nice bargain deals. Now, as interest rates start going higher, again, bond traders projecting 3.5 bottom this year. Some of these companies are running into serious solvency issues. I know a lot of fintech neobanks are projected, like I believe Vero was. A lot of people releasing articles. That company spent $85, I believe, per customer in terms of marketing, and now each account has just around $36 deposited within the bank. And so for a lot of these companies, they're really trying to stay afloat, trying to raise capital one way or another. Again, selling equity at this time of the year when the markets are down this much, not a great idea. But as a day trader, of course, it's just following the trend all the way through. Just short every single rally at this point, because this stock is down at this point like 95%. So you got to really be careful for a name like this. But yeah, the entire tech sector now just down. I'm still short on the Qs. Looks like we're trying to stay in this range just a little bit longer. But we'll see where this goes. I think this might be a sour hour for today, and I'm holding short as we make new lows towards the downside.
And so before we go, Brendan, another leg up on Agrx. It just took out 250 on the way to 265. Took another leg out, bouncing off VWAP nicely. I didn't get the Tesla short at 700 on the way down because I didn't get the fill actually. So I ended up getting it on the way up, back through 700. So I have a short just in front of 700. It could be a wick bottom through there. I don't want to give it too much room because you don't want to get caught short at the lows, especially at a nice even level. But I'll give it a little bit, like a couple of bucks there, to see if we can hold. Market's still heading southbound, Brendo.
All right, a few other things to note this afternoon. One of those going to be the big banks coming off of the successful stress test. We got a few of them this morning upping their dividends. A couple didn't. JP Morgan, one of those. It was a nice look initially, but with the entire move in the market coming off so significantly right at 10 o'clock, you can clearly see when that happened in some of these charts with the banks as well.
Oh, 100%. And the truth of the matter is, there was at least some relative strength in the banks. The stress test all went well for the worst case scenarios. Essentially, the results are going to be that some had to capitalize a little bit more, but there wasn't a heck of a threat to their buybacks and their dividends in the worst case scenarios. Now, I tend to think that's a little bit optimistic. However, the market liked it. And for Morgan Stanley in particular, who did raise their dividend this morning, I like them for the long side a couple of places, and I got away from it by chasing at $80. And the only good part is I got out of it right away, realizing that was a complete chase. What I liked was where it was breaking out from on the higher time frame. You had a consolidation 77 into the 78, and that's where I actually liked the long. We said that in the morning, and then you just wait around for that. When we got to this silly trade here, which I've done before, and the best thing you can do when you get that FOMO and chase it is if you understand that that's what you've done, it's like a keystroke error. Just get out. This was not at the price I wanted. It just happened to be at $80. So whatever, we get out of the trade and then waited for it to make a bottom in front of levels we like. Now, while the market was making fresh lows, We were holding on Morgan Stanley, 78.50, holding. Market was breaking the lows here. And when it broke the low of the day and we held 78.50, I got in. Scalped it to 79. And the same thing happened again. The market was making another set of fresh lows, and this was still holding 78.50. So I got back in again, thought we'd be scalping it to 79. But at some point, just like Disney, even one of the relatively strong names that has support, if the market just keeps on dumping and taking out major levels, eventually it's just going to follow suit. And that just happened while I was doing a trade of the day, or just sat back down. And yeah, continuing downside, still up 1%. So overall, relative strength in some of these banks. But it doesn't make a difference today. The actual trend has been to the downside. Sometimes seeing up that 1% mark is very deceiving. And AGRX, I keep saying it incorrectly. AGRX, now high of the day. It's at that double top. I'm thinking of places I can get into this more. It doesn't feel like it wants to pull back. However, a rejection of the double top, I want 250, this last breakout price. That's where I want to be buying the dip here. I don't think this thing is necessarily done. It was a good, clean break from yesterday's high. It gave everything back and then gapped up anyways. Usually when I see that, it gets pretty bullish. And on the daily, room to 3, room to 350. I think those can be in play if we can get through this double top. But I don't like playing the breakout. I prefer playing that dip buy. Let's see if we can get 250.
Absolutely. Good call, by the way, on Morgan Stanley. It's always interesting to note that in these economies, I was hearing other people discuss it as well, you sort of just want to be invested in some cash flow positive companies, especially as interest rates start to go higher. I feel like there's just like two sides of the market. There's companies that end up making money and companies that lose money. And that's why you see companies like IBM, as Sean calls it, international buyback machines, issuing 5% dividends. Their stock is pretty much unfazed, still trading around the 130 level, 135 level, if I recall correctly. Meanwhile, you have a lot of other companies on the other side of the spectrum. CGNT, huge loser in today's market, posted earnings miss of, I think, was it a huge miss, lost 79 cents per share. This stock is down 27%. This was down 90%, I believe, from just over a year ago. Software company based in Israel, again, not cash flow positive, and they're running out of money and running out of money fast in terms of their operations, refusing to give guidance as of the yesterday's or this morning's earning, I should say, and Wall Street not liking it one bit, because in this economy, you sort of just need cash to survive and see how long we can last until inflation gets put under control. But as a result of it, you notice how a lot of these SPACs or these small names, especially biotechnology, my favorite sector, I'd like to joke, getting absolutely slaughtered. In fact, as of this morning, even Cathy Wood was saying, she says that the recession is pretty much already here. What I think is quite interesting, given her holdings, take a look at what exactly ARC Innovations is holding. Their largest holdings is Zoom, by the way, comprising 10% of the entire ETF. Next, you have Tesla, Roku, and a lot of people are saying, how is Zoom and Roku innovative? This is just pretty much a streaming service, and this is pretty much what Skype was offering for pretty much a decade already. But nonetheless, it's interesting to know that even Cathy Wood says that, the economy is not doing too hot at the moment, but given her investments and her lack of initiative to pretty much change her innovation ETF towards more something like a cash flow positive energy ETF, she probably still is in it for a long term, and I think so as well. With that being said, when you look at some of these names and the fact that they've been down quite a bit, if you look at some of the smaller names as well, Pacific Biosciences, $50 stock about just a year and a half ago, now trading around $5. 2U education company, this thing's been down quite a bit as well, and a lot of these failed biotechnology companies down 95%. Spotify, I believe this was talked about earlier as well, $100 now, down from $400. So a lot of these ARC names just aren't doing too well, and so it's just, you have to be careful in this economy to be invested in something. Even the banks aren't doing too well, I should say. A lot of them down 40% on higher interest rates. That being said, a lot of them are, like, they pass the stress test. They'll be okay. They'll be around, in the next decade, 2 decades. You're not going to see the big 4 banks fail. Because at the moment, I feel like, I don't mean to make it sound too dire, but we got to see who can outlive, I think, others in the next 2 or 3 years, especially in the innovation sector, where a lot of these companies sort of have to raise equity in order to survive, because debt-wise, they just don't have anything to pay down their debts. People aren't interested in giving them low interest rates, especially not in this economy, and so just got to be really careful. At the moment, I'm short Cognite software for today. Probably have to cover, and this is a $4 stock, so spread obviously being a cent, not too attractive. But yeah, at the moment, I just don't see stocks rebounding too much, unfortunately. But in the grand scheme of things, I think the market may have found a bottom in Q2. I think a lot of these growth stocks have been down up 30, 40% from their bottom, I think, back after either the Fed announcement or in May. I think at the moment, we might just see stocks trading at these levels for some amount of time. I don't think a recovery, especially not U-shaped recoveries, anywhere going to be in play. But yeah, at the moment, I think just the market might just stay at these levels, if not go lower.
All right, let's talk QCOM. I'll show you the note here that kicked off this move this afternoon for Qualcomm. This was from a TF International Securities analyst who suggested Apple's own 5G modem chips has failed. So Qualcomm would remain their provider for these chips in this case. And that kicked off this huge move this afternoon, up now 4.7% here for Qualcomm.
And so just quickly before we go to Qualcomm, I see the move in DWAC there. It went 10% up and is now retracing a little bit. I'm not sure what just happened over in DWAC. Hopefully we'll figure out. But it's not very liquid, so a lot of times you'll just see that run and retrace because it opens up a liquidity vacuum off of maybe like one piece of news and then gives it back pretty quickly. Now, trust me when I tell you this. When Brendan actually put this in our work chat, informed us of Qualcomm to the long side, there was ample opportunity, I think, to grab a 130 here. And that seems crazy, but I'm pretty sure there was a chance. I didn't look at it until too late, so my first look was actually to the short side. I simply pulled the chart up on the 15, and whenever I see flash news that opens up a liquidity vacuum, I'm always just going to pull up my daily or 15-minute chart if I have missed that move. And once that happened, I was looking at this 133 area. So when I slide back to my 3-minute, or don't have to go that far from it, I can adjust one of my charts up here to the 15. And then I looked at that 133, and this happens. This is a 3-minute chart here, so it's going to look like it's overlapping. I totally bungled this trade. I had too tight of a stop the first time through. I grabbed the 33 short, got stopped out. It wicked above, and then slammed back down below 33. I got in again, all within the same 3 minutes, and then was able to get out at 131.50. So that worked. And then the exact opposite thing happened. It comes right back, holds consolidation, and then reclaims the pre-market high. And once I see that, it's like, okay, they really want to buy this stock. The pullback came and accepted the high of the day price, and that's essentially put up like a tiny little bull flag. If you had a one minute chart up, that's what you would have seen. I grabbed the long, and then if you heard me whining and complaining during the midday show, it's because I got out way too fast there. I got a 132.5. I took some up back at 33 because I was still thinking of 33 when I was shorting it, and then I took the rest out at the high of the day, only to watch it get to 136. I did take one scalp short with a head and shoulders kind of idea here, or just that lower high at 135, but that was a mistake. It was too bullish at that point. And even now, we are still holding above that 132.50. So this is putting in a pretty extensive breakout. We've also had a challenge of the 50 period. That was what else was going on at the 135 price. But if you zoom in a little bit here, you will see like above this 133, like I think if we can hold that price, this is a stock that has already made its multi-day base down around 120. It's already reclaimed its lower high, broken out, and the next thing would be to try to close above that 50-period moving average. The only problem is this market's getting destroyed. And if it wasn't for that, we'd be at 135 on Qualcomm, almost no question about it. But I can't sit here and pretend the market isn't doing this. 132.50, I think that's your only line of support if you want to try a long. If the market bounces from here, Qualcomm should have a decent shot to be one of the leaders. But the stop for me has got to be below that 132.50. You just can't fight it forever. I mean, I made that mistake in Disney. I showed you even Morgan Stanley was relatively strong. If we keep punishing lows here, it's not going to matter for Qualcomm. This is great news for them. There's no question about that. But that's not the only part of the equation here. You have to understand this is a relatively weak market.
Weak market it is. QCOM at the moment, I think, hit a high of day 135.5 towards 136, now fitting just a little bit. Still up 5% though on a day where the Qs are pretty much near their daily lows, down almost 3%. So it's a very impressive move from QCOM, and the fact they're able to retain it has to be news specific, as Brendan was saying. I think they're going to be having the monopoly on 5G chips. Definitely going to be Apple's supplier as their their own development seems to have failed. But yeah, QCOM at the moment holding the gains quite nicely, fading just a little bit, but this might just bounce over on VWAP and hold its gains at above 133. We shall see what happens. Besides that, a lot of other stocks moving quite a bit higher today. Agile Therapeutics, I think, nice call by the way, Neil. That was a good one. I think it got rejected, double top, AGRX, should be NQ name. Yeah, wow, massive wick from the top, rejected straight down, back towards 250. Let's see if this thing has any more room to run to the upside for a day, or whether or not the move is over. And you know, I just find the markets really interesting about how no matter what news goes on in the world, the markets always seem to react in some way or another, or there's some stock-specific news that are not stock-specific, but just markets seem to always price in the events of the actual market. I know Evil Fem Biosciences, another simply played at AGRX, producing, I think, contraceptive goods. It was like 30 cents. Yeah, I believe it was that. I forgot the exact product they make, but some sort of gel, I think. 30 cents, I think, just a week ago, and after the ruling on Friday, very hot button political topic. Now, as high of day, I think open today, 150, 400% gain. So it's like the market's always reacting to these news events, political events. I think it's just cool how the market always seems to price in everything, and there's always opportunities to be had, money to be made. It's very exciting, and you know, it's like before it's like the first thing I do when I wake up is think about the nice dream I just have. Usually now it's like, forget the dream. I'm going to forget it. The first thing I look at is the pre-market gainers, pre-market losers. What's going on in the market today? Are there any major companies that are up, down, issuing new guidance? We're seeing what happens to the market because the market's always moving. The world always spins. It's just really exciting to look at. And speaking of news, I know another company I was following a little bit, not the largest company, Lending Tree, however, a $5 billion company at its peak last year. Not quite a loan company by itself, but a loan broker, mostly doing mortgages and car loans. This was $400, I believe, back over in the peak of the pandemic, now down to $48, a 90% drop. And this company doesn't actually issue its own loans, but just as a marketplace for other loans, kind of like a Loan Depot, perhaps. But yeah, this is a name that's been dropping considerably. And the issue with this, they've been issuing a guidance, I believe it was last Thursday. They expect the revenues to be down around 15 to 20% on fewer people wanting to actually take out loans in a high interest rate environment. So on that news, this stock dropped a solid 15%. And it just, you know, puts more pressure on fintech, I would say. In the markets, I always want to look for things like sympathy plays. Like if Lending Tree is saying that they're going to miss earnings by a solid 15, 20%, and Loan Depot is not moving, I'm thinking there's a good chance Loan Depot ends up missing their earnings or something, unless, you know, the issue is Lending Tree specific. And Lending Tree is a much smaller company, I'd say, or a smaller company. I don't know if it's much smaller, but it's just interesting to always follow the markets and see how one piece of news can end up affecting another stock drastically. So to me, that's something I'm always interested in looking at. As for the markets, looks like Q's flushing now low of days again. S&P now, I closed my short position a little bit too early, unfortunately. I thought we'd see a little bit of a bounce there on that green candle. I use blue candles here because I like blue. Nice color in my opinion. But looks like we're seeing engulfing red on the 5 minutes. Trying to move lower now. I think I'm going to short the S&P and the Qs as we break new lows of the day. Looks like it's going to be, in fact, sour hour rather than power hour, unfortunately. But we shall see where we close. I think
power
the Qs
if you're short.
Can power if you're short. That's right.
If you're short, it's a power hour.
It's going to be the hour of the flush, or geez, we're really flushing to the downside now. I'm going to reload my shorts, as Sean would say, on the Qs and see where this takes us as we head into the closed final hour and a half of trading.
I want to mention Nike, guys, because as Tony was saying there, market at day lows. Nike here just making a fresh day low. 103 coming into play, now down about 7%. Nike's down 7% almost after being up better part of 3% early on this morning on this earnings report. This crazy move that happened right out of the gate gets faded and then some for Nike.
This is what I got to do for Nike, because I had this conversation with at least one trainee, and maybe even two this morning, or at least this afternoon when we were off air, saying how there was almost no way to win if you like to short on Nike at the open. And this is, a lot of times I'll show you a 15-minute chart like this, and you'll see this tiny wick from 108 all the way up to 114. And you'll ask yourself, that's probably just a dark pool print. The stock never actually went there. I was saying the same thing on a few other ones. No, that those are real, that it actually made this move. ran everybody's stops and just kept on breaking 110, 112, 113, getting all the way up to 114, essentially to yesterday's high and almost to the aftermarket tops. When they go top and bottom line beats, the algos buy it up in the aftermarket, and everyone that was positioned short ends up having to cover. A lot of options bets getting made, so you get more volatility on earnings plays. And so when you get these highs where liquidity comes in, if that's all you were looking at, then I guess that's the only way you would have had a winning short, because you would have shorted in front of 115 and you're good to go. And it just retraced all the way to the bottom and so rapidly that it was a complete flush. When it rejected 14s, there's a 15-minute chart. I mean, we're back to 110 almost instantly, and then from there we're at 107 before you could blink an eye. And it's a difficult thing to even accept. And all I said to one of the trainees I was talking to was I went back to a line that I was telling myself. Sometimes the best play you can make on illiquid stocks, or especially that are wild stocks at the 9:30 open, is to sit back, maybe don't trade them, or if you do trade them and take a hit, revisit at about 10 o'clock. And if your original thesis is still valid, like you liked a certain direction, you had some key levels in there, if at 10 o'clock it still makes sense to you, then jump into the trade. Because when I look back at where this was at 10 o'clock, if you just ignored the fact that it did the most ridiculous, let's just screw everybody candle, well, at 10 o'clock, after a half an hour, this was simply taking out the pre-market lows and then running to support at 104. And that's a really simplistic trade. Now, you could have had this short, breaking that low, simply giving the previous pre-market high, risk $1, try to make 3 or 4. And it does require you to ignore what had happened right at that open, in that opening rush. But truth be told, the guide was poor. Everyone was talking about the worries when it came to their inventories that were up. And most people thought this was a short coming into today. And all it did is run all those stops and then simply validate every single short idea that you would have had the rest of the day. And sometimes that's what you have to do. You have to pretend that you didn't just get destroyed on that initial short, sort of close your eyes or maybe just ignore that part of the chart and say, well, what's happening right now? What do I see in front of me? And that was the stock taking out the low under pressure after poor guidance in a chart that was also on the daily, rejecting the 50 period. Below a key price, I was even saying, if it's not above 117.50, I'm not going long the stock. And I got away from that. I was one and done to the short side on Nike, but there was a chance at 10 o'clock to get back in. I was just too blindsided by that $6 move to the upside to see it for what it was, which was just an unbelievably rare shakeout.
Mm-hmm. Very fascinating move today on Nike. I saw yesterday right at the after hours report, I think the move itself was kind of muted. I thought, okay, Nike's more or less going to be a flat name tomorrow, certainly not going to move very much if the immediate reaction was like, yeah. But then guidance came out, and as you can see now, we're down 7% today, about to break 103. I think I shorted a little bit too early, preemptively, at around 103 and a penny. We might just see a little bit of a bounce here on Nike, but definitely a red name for today. So I want to give a shout out to, I think it was Bart who said earlier in chat, Loan Depot originates loans and Lending Tree does not. I think good catch there. I think the name I was thinking of was Lending Club, another name that's been down quite a bit. They're not a loan originator either. I think they more or less connect loaners and people needing to take was it the person needing the loan, the person giving the loan? So they don't take the direct exposure either, but they're being hit just as hard, I should say. And it looks like the markets itself have been down lower and lower now. I think Nike's still trying to hold 103. Q's at the moment trying to test 284, see if we break below that. I'm still holding my short at around the 284.55 level. Short the S&P as well, now breaking towards the low of the S&P, trying to test 2% down. And I'm hoping that the 103 level on Nike here breaks. But besides that, it's just looks like we might just see new 52-week lows for the markets. But I have been noticing, though, for the markets, we've been seeing a bit less volatility, or maybe not less volatility, so to speak, but the short-term trends up and down and up and down. I think we've been seeing a more muted reaction. I think that might mean we actually found the bottom, at least close to it, hopefully. I've been hearing analysts say that Q3 likely will be the bottom. The midterm elections later into this year in Q4 might be a catalyst back to the upside, since elections actually have been correlated with good stock market gains due to the due to less uncertainty, at least in a geopolitical sense. But yeah, over here on the Qs, you can see I think we might be heading back towards the 270 at the moment if this downtrend continues. On the daily chart, 52-week low seems to be about the 270 level. That's where the lowest wick is. If I can, yeah, right about the 270, it seems to be where we bounced from there. Head all the way back to I know in charts here, this wick isn't quite accurate, but the high was around 295. So that's around a 6% bounce, but which I can kind of draw in this chart over here as I can do on TradingView. But over here, you can kind of see like the downtrends. It's been less volatile, I'd say, in more recent times, where we see more of a reversal immediately after the sort of Powell was talking about how the economy was strong and it can handle another 75 basis point rise later into July and possibly 50 basis points over in September since there's no meeting in August. But I just think there's less volatility now, so to speak, on the Qs, and possibly that's a good sign for the markets, possibly reversing to the upside maybe next quarter. But nonetheless, I think today's reversal is very nasty. We might see the end of this short-term bounce to the upside, I suppose. I guess what's been happening since the middle of June, and we might see some July lows for 52 weeks on the Qs as we head into the end of the month. But yeah, markets at the moment flushing towards the downside again. Looks like we're getting close to the 284 level. Nike still holding 103. I'm short on just about everything here. But yeah.
All right, was going to mention Oxy here, guys, but I just saw crude oil trying to get back to day highs. We're obviously past the pit session close for crude, up 2%. But heads up on Oxy, some of the energy stocks starting to go a little bit here. It was a note from Warren Buffett, I should say, and Berkshire Hathaway again on Monday in there buying up more than 900,000 shares again. He purchased more than 9 million shares going back to last week of OXY. That was the note from this morning.
So as that was happening, I'm like flipping my charts, going over to talk about Oxy, which we were trading, and I accidentally got out of Agrx, all of it. It'll be for a winner because I bought 250s and it was at 57 at the time, but I'll work my way back into that long. I still feel like Agrx has a chance to go, but that's the only reason I'm out. It's kind of unintentional there. Occidental. I don't know how many times I'm going to have to talk about the same thing. Relative strength, I never eventually got into a short. I liked it off of this break. You could look at the daily chart, and it had this nice little double top. You're essentially gapping above it. Fine, fair enough. Oil was making a strong move. All of that was well and good. But all I was seeing here was once you're above this price, which was $60, I just like the long in front of it. And we like this pre-market low. So this wick, and this one's not real. Unlike the wick that you saw on Nike, that didn't really happen. The bottom was at that 650 at the open. We got the dip buy, took some out in front of the pre-market highs, and we liked 63 for the top when I pulled it back. It got to 63, and everything went to plan. I put a trailing stop in, so I missed about the last 30 cents of the trade. I did have the misfortune of getting back in at 62, which, I probably chased it getting in a little bit too early at 62. Thankfully, it gave me a chance to get right back out at the same price. The dip back into 61.50 made some more sense, holding some higher lows. I was able to take $1 there. And then just getting in and out flat at 61. However, if this was holding up when the market reversed, and even oil reversed, by the way, as well. So crude oil futures were reversing as the market was coming down as well. And we've seen in the last little bit, there's actually been more momentum to the downside when it comes to oil futures. It's been a bit of a relief rally, but it's still in a bit of a pullback trend. So when you got this severe lower high, I just wasn't thinking, hey, it rejected your resistance level as everything is dumping and oil turned around. So why am I still biased to the long side? And again, I might be up on the stock, and yes, the trade worked several times, but I can't look at this and say if you thought 63 was resistance, that the best trade was to go long 62 and long 61 twice. Yeah, sure, you end up still positive if you work it correctly, but that doesn't mean it was the right thing. It was actually to look at that rejection and then short it off the lower high, and you'd still be in the trade right now. And that's the better trade, the one that allows you to hold it into the trend. And again, it's not an easy thing to do, and I'm mostly just saying this so that I can listen to myself next time and recognize reversals for what they are. I love shorting things when they have that kind of a setup. Yet I found myself in only Coinbase. And even that I had to chase $2 to get into that thing, which we'll probably get to at some point. But much like Disney, There's so many names that were like this off of the open that you love for the longs, and the market simply decided they weren't going to happen. And your only choice was to not be stubborn about it. But the thing you could always do and be better about is finding those reversals. A great lower high. You could have given that 62.5-ish short to 63. And we actually have held $60, so I guess that's still support level. But you'd still be in this short, a piece of it, looking for the break of 60, as crude oil futures are now closed. So electronic trading, things will probably go sideways from here. But what a reversal, like everything else in the market. Even something strong like Oxy could barely hold up.
Occidental Petroleum, what an interesting company. This is reversal today off 63, but a lot of its backers still believing in Occidental in the long term. In fact, Warren Buffett, I believe, announced that he's holding now around a 16% stake in the company, representing around 1/6 of all shares outstanding. And this is an interesting move for Warren Buffett, more of a conservative investor as well. I think he took a large position in Verizon earlier this year, now dumped it in favor of more oil plays. It's funny looking at a name like Occidental Petroleum. I remember seeing the stock around $10 back in March of 2020 when close to the time when oil futures actually went negative on a front month. I believe it was the May contract on around April 22nd or 21st. I believe crazy times to be in to think that from negative oil futures all the way to pretty much oil surging. I think now cooling off a little bit, closer to $100, but it was at 120 for quite a bit there. I think rejected off a double top. But yeah, crazy pain at the pump for a lot of Americans that are more prone to driving. We here at Day Trader World, most of us fortunate enough to be able to take public transit, which haven't quite seen the same hike in rates. But yeah, oil, wow, what a play, definitely. A lot of backers for long term, and I think so long that oil is high, inflation is going to remain high because it's just contagion, I feel like, with everything from consumer goods to food to no matter what it is, it always involves some sort of energy. In fact, they were just talking about, I believe, the price of shipping containers, or not the containers itself, but the price to ship a shipping container from China to the U.S. It was something like $5,000 from before the pandemic. Now it hit $25,000 at one point. Now I think closer towards $20,000 to $15,000. But the price of shipping going up is just affecting the prices of everything, including inflation. And this is slowly going to, I think, trickle down into people changing their business, their personal spending habits. As you can see by the consumer report released today, confidence in the overall market, I think, has decreased quite a bit, at least in confidence in consumer spending. So long that people are spending more money on gasoline, they have less money to spend on discretionary goods. I think that's ultimately what's going to hurt a lot of the market, including tech names. Well, obviously tech names, I think, less involved with gas prices there, but just the overall is, there's only so much money to go around, and more of it's going into energy prices, a lot less to go into discretionaries. I covered my short position over here on the Qs. Looks like we're recovering just a little bit. Might not see that sour hour after all, or power hour if you're short, at least temporarily, as we kind of go back towards the upside. Two green 5-minute candles, both on the S&P and on the Qs. A little bit of reversal there, now down just under 2 3/4%. I believe the lows were something around like 283. We touched 283 on the Qs. I think below 381 on the S&P, just for a tad there, and then we saw some more buying pressure upwards into the markets. Now buoying us, I can't pronounce that word unfortunately, but rallying just a little bit here on the markets. Occidental Petroleum still holding its gains. I'm sure Qualcomm is as well. But yeah, news-specific items I think can behave a little bit differently, but altogether, that's why I think it's more interesting to trade the indices at sometimes. I think names like, if you're trading Qs or trading the S&P, you can use a lot more technical analysis in your trading, and you'll be a lot less susceptible to huge moves one way or the other on news releases, like what happened with the DWAC as well. But yeah. At the moment, I think I'm closing my short positions on the indices. I still have my short position on Nike. I think I should close that as well shortly. But overall, I think at the moment, markets might just see a little bit of a bounce.
Snowflake, guys, trying to bounce, speaking of, right now. Still 2.6% to the downside, but just saw this volume spike here. Trying to get back higher. It's been sitting on this 143, better part of the midday. But Snow, if you remember, if I zoom out here a little bit, was actually very positive in the pre-market up here before 10 o'clock. That number comes out, and this thing also gets slammed. But an upgrade today for Snowflake.
It was an upgrade. A couple of weeks ago, someone asked me, I've gotten this question a lot, actually. Well, Sean and I we all get this question, actually, to be honest with you. Like, what's your favorite setup? Like, what's the one trade that when you see it set up in the morning, you're like, ooh, that's what I like. And for me, it had mostly to do with the fact that we were in a bull market for quite some time, especially when we came to YouTube. So how long you guys have been seeing us was the pop and fade, which is, when everybody is chasing breakouts, look for something which tries to go at the open and rejects, right? Because what essentially happens is all of that like FOMO-ish money that's like, oh, look at this break on Snowflake at 154, got another upgrade for Snowflake. By the way, it's up like $35 in a week. Kind of come too far, but it tries to make that breakout, and there is a rejection of the break. You get a wick off top on what's already a double top. It also just happened to be a market reversal as well, but that's an entry I like, and I like it for a couple of reasons. One, when you go to a shorter time frame here, you're just looking for that first consolidation, like anywhere in here, 153.5. What I like about it is you're not guessing as to where you're wrong when you take that at the open. When I take that setup, I'm just getting in, here 153.5, and I'm just out when it takes out the high of the day. And you can maybe give it an extra like few cents or so, like, I don't know, like you want to give it an extra 15 or 20 cents because the stock has a spread. That's fine. You have some discretion with it, or maybe you give it to the next even dollar. But that's, what you're doing. I'm just out at that price, and probably my first take profit is somewhere near that pre-market low, and then you're just looking to hold the trend for the rest of the day. The market does help you out in this situation, but it's a relatively simple trade. Now on Snowflake, I had a lot of things I was looking at this morning, and this wasn't top of the radar, but I've been getting away from that particular setup. I've been in less shorts, and I think it's because I haven't been taking the setup where it presented itself. And I might have been passingly, I bet you if I watch back the morning show, I actually did mention this on Snowflake that, oh yeah, well if it rejects that high, you probably have yourself a good short. But I wasn't watching it at 9:30 to be able to do that, but you also have to pay attention to it when it's making that lower high at 9:45. So there was definitely a trade there in Snow for me. I just missed out on it. Par for the course. Like, I can't complain too much about today, but if I look at the difference between today, what's essentially been like a flattish day, like you get one winning stock and one losing stock for me. If I look at what could have turned it into a huge day, it was all of these short setups that I missed. And I love these things so much. And that's one of my favorites. And you can tell it's setting up for that based on the double top on the 15-minute. And it's also grinding towards the high at the open. That's exactly what you're looking for. So that's coming toward that setup. And it's not to say that Snowflake didn't have good news and didn't have some reason for bullish sentiment, trying to hold above the 50 period and close above it a couple of days in a row after a strong base. But let's remember, this is a ridiculously overpriced stock still. Like I don't want to look at its forward P because I'll probably throw up if I look at the forward P of Snow. It's probably still over 100 without even checking. So it's gotten off the bottom, but a lot of that has to do with how far it's fallen. When a stock has come down from $400 to $100, rallying 25 or 30% is not very difficult. That's why you get these impressive bear market rallies. On a percent basis, sure, it's a great move. But for people that are holding the bag, it's completely meaningless and useless. Like if you were long at 250, who cares if it went from 110 to 130? Like you're just as screwed as far as you're concerned as you were before. So that only benefits people buying at the absolute lows. And so you have to take them with a grain of salt. And that's why I've sort of been preaching. I want to see something like this take out the next level. See when it fell apart at 160 here after having a double bottom, and then that was resistance? Well, you want to see this closing above 160. Above that 50-period moving average, and then it can make another leg up. Go look at Li Auto's chart. It did that, and then it got back towards some highs. That's actual strength instead of just a little tiny relief rally, which is what you've had in Snowflake.
Yeah, I was just going to talk about it, but I see you mentioned in the chat as well, talking about forward Ps. Shopify is a name I know. I think it has a P ratio above 300 or something like that. P ratio about $1 per share, trading at 350 at the moment. This is a name that's going to do a 10-for-1 split, or is it a 1-for-10 split? I forget the ratio was, but you're going to have Shopify pretty much at the current price being $35. If you have one share, you're going to have 10 when you wake up in the morning. I think it was might have been Friday this week, if I remember, or sometime this week or next week, if I recall correctly. But this is another name that's been beat down quite a bit, and And I really like the point that you mentioned there. For a lot of the bag holders that have been holding, at these names, these tech names, back buying in at, first half of 2021 or even the latter half of 2021, it's pretty much meaningless whether or not this stock goes up 10%, 20%, because your unrealized loss goes from negative 60 to negative, 55. That's not too big of a difference. You're not really tempted to sell and get out of the losses, still seeing a huge red number. But speaking back on some of your trading strategies, I absolutely agree. You don't really want to try to predict the reversal before it happens, but trading the trend is something that absolutely I think is something I've been learning, since I've joined Day Trade the World and Trader TV. I guess I'm not technically joining Trader TV, but since I've
Yeah, you are.
Okay, well, I'm the bell ringer here. But since I joined you guys here at the company,
You've got a segment, Tony.
I got a segment. You're right. What am I saying? But I think trading the trend has to be the most important thing you can do in day trading. It's really hard. I think the vast majority of people can't do it. I certainly couldn't do it for a very, very long time until I started seeing other people, do the very thing I was so scared of, and they were very successful in doing it. Things like, adding into winners, and selling out of your losers immediately, having a stop loss. It's an instinctive reaction to me, at least, where I'm always, hunting for a nice bargain. I see something like the Qs down 2%, and instinctively I go, wow, what a nice discount. Especially if this was like a new, daily low. If I see this printing new lows every 5 minutes, I'm thinking to myself, quick, I got to do the bank transfer. I'm going to buy some shares of the Qs. This is what a great price this is, and I'll just be down like another 5% next week or something like that. I was loading into the Qs, the rest of the markets as well back in January, February, March, April. I just see lower prices, and I'm just too tempted to buy, which I think it's for a long-term play. It's absolutely fine to buy into index funds no matter what the price is. But that being said, if your time horizon is something like minutes, or an hour or something like that, even for a swing trader, going against the trend seems to be, it just doesn't work out in a very, in a very good sense. Think about like owning a business or something like that, and all of a sudden, out of nowhere, you start seeing more customers come in, and your business is growing. Your instinctive reaction tends not to be, oh, quick, I got to sell the business. Otherwise, the customers might leave, and I can't, I can't sell the business for as much as I can anymore. I think, if that were to happen, I think the mindset most people would have would be like, wow, something changed about the economy, or something changed about the business. Somehow I'm starting to drive more customers. This is a great positive thing. I believe that if the trend is that I'm getting more and more customers every week, I'll probably be growing this business really, really quickly. You naturally don't really bet against the reversal, but when you see the price action, you see the profit, it's just too tempting to go against the trend at times, or when you see the profit, you just want to take it, and when you see the red numbers, just keep adding to it, dollar cost averaging. But going in favor of the trend, I think, is the most powerful thing that I've learned. You see the Qs making new intraday lows, just short it. New intraday highs, add to it, buy it. I think buying intraday highs, selling intraday lows, that has to be the number one strategy I have for trading. At least that's a new strategy I've been learning here, and I have not been a very good trader before I've been here. I think this certainly helped my trading, just learning from the strategies of a lot of the great traders we have over here. Prad, Luca, Ian taught me quite a few things, so always grateful for them.
That's what you got to do if you want to. Oh, it didn't work. Oh, I tried to hit the stack up the cash, guys. Did it work? I didn't see it. Yeah, well, I did try to hit it. There we go. There we go. Okay, now I see it. If that happened twice, maybe I'm just going crazy. I got gray hairs. I'm old, man. But look, it's fantastic advice. And to prove that point, here's Agrx, which has been just trending to the upside since the open. And yes, it's had significant pullbacks, but I always come down to this. If you look at when this really accelerated, and again, it had a consolidation off the bottom that we took advantage of. But really, this trade on volume, when it broke $2, is when everything started going ham. And if you look at the biggest volume candles, it's when it broke 2 and it's when it broke 250. And if you have a quick look-see, at the trend of the stock since doing that, well, it's held $2 support since then. And a lot of times I'd be thinking about where should I be short, and I've had the other attitude here, which is if I thought on the daily chart the significant turnaround should either be $3 or $3.50, and until we test that or until we fail $2, then I only want to be long the stock. And maybe that's going to you're going to miss some obvious scalping opportunities, because I could have scalped short at 270, got back into the long at 230. I could have scalped short now, again at 275, maybe got back in. Yeah, I'm going to miss some of those. But you know what? I'm not going to miss the long opportunities if I'm only looking long. And sometimes you've just got to be able to do that. This stock feels like it's absolutely headed for this triple top breakout. I'll continue to buy the dips. If it fails this time, I'll probably wait for VWAP because, I mean, buying at 250 has been pretty good, but it's been basically telling you it wants to test lower than that. So I feel the next time it dips down, I'll probably wait for 230. I'm always holding a small piece of it in case we run those highs and I miss the breakout, but this stock has just been super strong when nothing else really is. Like, if we're honest, nothing is all that great. And I want to come back because a lot of people asked about Coinbase or have been talking about Coinbase. And okay, yeah, I got out of Coinbase too early. Both Sean and I like Coinbase short at 58 to 59. Well, guess what? You're not getting short at 58 to 59 today. It popped. But look at that setup. Well, wait a minute. It tried to break the high of the day and failed. Tried to break the high of the day and failed. So what setup do I like? That happened once again here. But we got the 55 short, and that was simply looking at when it took out yesterday's lows. And I did at least hold some of it down to 52. It did make that massive flush, and now we've already gone to 50 bucks. I just didn't think it was going to be this bad in the overall market. So sometimes you can have the right direction and not even believe that you can see the prices that end up coming in here. That's what happened on Coinbase. 55, the next even dollar level is obviously 50. On the daily chart, room to 45, which is your actual all-time low on Coinbase. But 50 is a monster round number. We get to that price. I don't know if I want to stick in the bid on Coinbase at 50 bucks. I'll be thinking if the futures are making fresh lows and breaking lows, I'll probably just try to scalp the short. If somehow we're catching a bid in the market, maybe you can take a 50 long. But Coinbase, I think it did hit SSR. It got really, really close to it there, short sell restricted. So it did. It says yes, so it must have hit 10% at some point. But that was one where you had to accept that you weren't getting the short off resistance at 58, and the only thing to do was to hammer that breakdown at yesterday's low. Exactly what could have been done on reversing on Disney. You could have had that trade. Could have just taken that trade on Nike at 10 o'clock instead of sort of getting away from it. Sometimes it's just about it breaking down. Tons of stops were at that 55 price, so it wasn't that hard to think about shorting there.
Coinbase, interesting name here, down close to 10% today, almost short sales restricted, I believe you were saying. This name was, I believe, $64 last Friday, but quick turnaround this week as we had, I guess, just 25% above the all-time lows over at 40. Again, crazy to think that a name like Coinbase, very well known in everyone's minds, is down about almost 90% from the all-time highs when it just IPO'd. I saw it hit above the 400 level for a short duration there right after the IPO. I think consolidated around the 300s, the 200s, and now more recent times and more recent months, just absolutely crumbling. Coinbase, I think, gotten a bit too ahead of itself with the expenses. Recent times, I've been hearing news Coinbase laying off 18% of its workforce, looking to manage some costs. People are saying layoffs being very bullish for Coinbase. I think Coinbase also has pretty good goodwill value in terms of its assets. Just all the marketing it does, I think it's a bio candidate, people are saying, for some of the larger banks that want to sort of enter into the crypto space. But yeah, down 90% or close to at 87%, I'd say, from the very highs. A name to be day traded, but at the moment, if you're a long-term holder for this, I think it's got to be careful holding this thing into the next coming months. Higher interest rates for at least a year and a half is what bond periods are pricing, probably a lot longer than that as we try to control inflation a little bit. So for a lot of these growth companies, Coinbase included, just not very delicious, not very appetizing, unfortunately. This current market. Agrx, I think we just hit a triple top on this name right over here, unfortunately. I was hoping we might break towards $3 as some people were talking about in the chat, but this looks like a name that's tried once, twice, 3 times. So hopefully that charm, unfortunately, doesn't look like it as we're fading a little bit back down towards the downside. Still up 110% for the day. So Agrx definitely a runner here, but unfortunately, if this fades this third time around, I just think the momentum will not be there anymore for Power Hour. So if this contests the fourth time and breaks right through the 280 level, that'd be really exciting. I think if we break 280, $3 is definitely on the horizon. But unfortunately, even as the markets, I think now are not really printing new daily lows, Agrx kind of just holding on to this level, but not quite breaking above it, unfortunately. I did see somebody mention in the chat, what do you think about holding cash in this current economy? It's interesting, actually, to think about, when you think about inflation, you think that everyone's trying to get rid of their cash. Yet at the same time, you have financial assets just absolutely plummeting in more recent times as well as inflation. It's like, food prices going up, prices of my stocks, unfortunately, I wish it could go in the same direction. Unfortunately not. And so it's also fascinating to consider, I think, real assets versus financial assets. This was something I was reading the other day. I think somebody online was talking about a boat he purchased back late last year, October, November, and seeing that, he was concerned, hearing headlines about the market crashing, stocks now tanking quite a bit. And he goes online, looks at the prices of boats, and he's making a nice 10, 15% return on the boat he bought at the peak of the tech bubble. And so I think that kind of just highlights the difference between, a lot of these speculative financial assets versus so-called real assets that don't pay a dividend, they don't have earnings, but they provide some sort of reasonable value, and you always have people kind of interested. I don't know if you can quite compare a yacht to something like an NFT or something like a Bitcoin, obviously. I think in a way, it's like those aren't real assets. I feel as though they're more like a financial asset in a way, if you can even consider it that. But, the price of a lot of these real goods, especially like coins as well. I think coins have taken a little bit of a hit. But I was just talking to Dan earlier as well. He's been talking about the watch market for a lot of these Rolexes. You can't get a discount on those things. A lot of these collectibles, price is still sky high.
It's crazy.
I know. It's like
Dan's the only reason I even have one expensive watch.
He inspired you to get that one.
Well, so anybody that knows me, I'm not a flashy person. I don't spend on a lot of things. Like I don't wear expensive jewelry. Like my wedding ring is tungsten, but it's as cheap as you can get. It's like indestructible too. But so I'm not into that. But I was on vacation, and this is after like my first big paycheck as a day trader. So my first time I had a big month. Like I won't say, but I was happy, and I went on vacation for the first time. So I'm down in the Caribbean, and I'm in a jewelry store. And my girlfriend at the time, I was buying her something, and I see these nice watches. I'm like, man, these look really nice.
Oh, yeah.
And then the guy's like, this is like it's one of the James Bond watches. This tag. So I don't know anything about watches. I call up Dan, who's at the office. He's my partner at the time. With Sean, we owned our own trading floor. And I said, hey, look, this is what I'm looking at. What do you think? He goes, that's a great watch. What's the price? And when I told him, he says, that's 40 cents on the dollar. Wow. He goes, buy 3 of them, and he's so seriously, he's like, he said, buy 3 of them, and it'll pay for the one that you keep. I was like, well, how do I get it back in the country? I have to pay duty on it. So I didn't do that because I'm too honest. I just bought the one and kept it for myself, and I wear it as a reminder. Essentially, it's just a reminder to myself that, I'm not a flashy guy. I wear it for good luck as trading, but just to always keep me grounded. It's like a good luck charm for myself. But it was good advice. I kind of wish I had bought a few and made some money off of it. But before we go to Brendan, just to get back to trading for a quick second here, I want to point AMC out. Not a lot of stocks that are back at VWAP here, and AMC just tried to reclaim VWAP, but it failed at that 1380 price. 1380 is where we were going long successfully off this yesterday in the afternoon on AMC, and it had that good run and actually had some support down there. But until we get back above that price, I don't really love the long. It failed exactly where it had support at yesterday, which is not a very bullish sign, despite the fact it's showing some signs of relative strength. Brendo?
2 things. TCAT, TKAT, that's actually the right chart, Randy. Good job. TKAT is an NFT name, halted news pending right now. So this was doing nothing all day long and just halted news pending. So there's that. Rivian just made a day low. There was a note from Electrek suggesting Rivian's going to get into e-bikes and e-scooters. I mean, listen, for someone who lives downtown Toronto, I actually don't mind that news if it's going to look like an R1T for an e-bike and e-scooters coming for Rivian, guys.
Yeah, I mean, it's not necessarily really bad news. TKAT was a halt.
Wow.
Let's
NFT
do it.
play.
Yeah, it's got like no volume. This stock used to trade more volume than that. I'm a little surprised to see there's no vol on that thing. So, I mean, if there's no volume, I don't want to touch it. But Agrx, and I hate to come back to the stock over and over again, but it keeps having these crazy volume spikes. It just had another one. Sorry, I was on my 15-minute chart there, and I have to zoom back in on my 3. But it just had another spike down, so it's rejected that top. I've said to you guys, I want to wait until it gets to VWAP for any more buys on this thing. I don't want to be chasing it too far. This market just took another low. That puts Coinbase 50 back into play. Definitely want to be all over that if we get down there. Tesla, I may have given that one up too early, but that's a breakdown trade. If I take a breakdown trade, that's not like I'm holding it to the close. I'm picking a stop. In this case, I gave you a 702.50 and then got out there. I'm now flat on the day on Tesla. I gave up what I made on the long trade when we scalped it. But if this does go lower, 700 was that line in the same. You just had to hold it a few levels against you there. 680 on monster level for Tesla if it gets down to 680. I don't think it'll happen. Right now, what's really going on, if we go to the futures here, is you're in almost complete breakdown, like you've taken out the support on the NASDAQ that was below that 12,000 level, and you don't see a heck of a lot here for a couple hundred points, unfortunately. Like I was about to say, like you actually have some support, but that's over on the ES. Like the ES still has, S&P 500 still has some support potentially at that 3,800. The NASDAQ, on the other hand, now there's really not much of anything. So if we're going to catch any kind of a bounce here, I think it's going to come from the S&P 500 around this 3,800 level. Otherwise, yeah, we're in some serious trouble here in the overall market. The trend yet to break. Amazon 107 in play here, but it's Coinbase 50 that's caught my eye, Brendo.
All right, so the TKAT news, guys, looks like a 30 million notional share sale, or 15,789,000, whatever it is, 400 and change. So a share sale coming apparently for TKAT.
Oh, geez, that's not good news. If BHAT rallied like several hundred% off them canceling a share offering, while selling shares obviously is going to bring it down quite a bit, I think. I'm not sure if this was pre-planned or some sort of a shelf offering, if it was pre-registered, but yeah, I don't think that'd be good news. See what happens when it opens. Crazy.
Down is my guess, and I see you guys, and I appreciate. We have no issues. Like I'm not in a lot of trades here. I'm holding on to Robinhood, which I haven't gone over. I just think if the market continues flushing, I don't understand why Robinhood's not already at 850, 860. Yet it's somehow holding up here, but I have no reason to get out of it. And then Agrx we've gone over. Just because we're looking at both of these, AMC versus GameStop yesterday, I'll point out once again that GameStop is relatively weak. For anyone that is looking at this thing, AMC always stronger the last little bit here. So any kind of spike on AMC and it rejects that price, that was actually an opportunity to just go short on GME, and I'll probably play it the same way. If AMC breaks out and we get past that 80 price, 1380, then I'll be looking for any kind of reversal. If it gets to 15, let's say, I'll be looking for reversals on GameStop, not on AMC. Only want to be long that stop if I'm playing the meme names. I want to go back over to, if I can, well, I haven't shown you Robinhood, but I will go over to this name just very, very briefly. The trend has been pretty good, and my stop I'll have to adjust. I don't know why I have such I don't need that aggressive of a stop order when it's that far in the money. But this has been giving it up the entire day, and it has broken the opening range low and tried to recover above it. But unless this threatens above $2, I'm just hanging on. I was able to get top wick, and I'm going to tell you, it's going to look like a fluke to have this top wick. But if you remember the halt and then the reopen yesterday, so it broke at 845, halted at 896, reopened and tested at 970. And if you go back and watch what I was sort of telling you guys, I got out everything, almost everything right here in that 935 to 940 range. And it's hard to tell on a 1 or a 3 minute chart, but all these wicks, almost meaningless when it reopened. All of the actual liquidity was here, was between 25 and 50, and it was right in that pocket. And the reason why you can tell that's legit, because what happens when it bounces off the halt price and comes back there again? That same place where there was liquidity in the vacuum at the open, that's exactly where the sellers were again, right at about 925 to 950, stalling out at 935. So you fast forward to today, when essentially Sam Bankman-Fried's like, what are you talking about? We're not that, there's nothing going on. We're not buying them. There's no interest, blah, blah, blah. And where do I want the short? I want it where they were selling on that spike up, where when there was a vacuum in liquidity, where did people feel comfortable making a price? And it was right there in that 25 to 50 range. It made one move into there, rejected that price altogether, and has been falling ever since. Can't say it enough. Liquidity vacuums are a fantastic opportunity for you to find good price levels. Because essentially what happens is all of the algos stop making a market, which is what they do. Mostly algos making markets these days. They stop doing that when there's flash news or a halt or something like that. And then all of a sudden you get a liquidity vacuum. And then only like the big boys or people supremely confident with a big order flow, they'll come in and then go in certain prices. And when they pick that price to sell, and that's the rejection of the move, what do you think is going to happen? Do you think they got it all done? Do you think they'll still like selling at that price? If you have to guess, I'm going to guess yes, because what else do you have to go off of? And then that's how you can sometimes get these ridiculously good-looking top wicks. Now, granted, I could have had this trade, could have broken 50 and I'm out, but I'll still take that trade 10 times out of 10 because yesterday it showed me when no one wanted to bid or offer that stock, they darn sure were comfortable with that price area. So when it gets there, that's your option to sell. And if you're long this morning, that's where you want to take profit as well. So, these are a good learning opportunity for you. Do not ignore these halt prices. Even day 2, day 3, they can be significant. I remember when GameStop and AMC were halting all the time, when DWAC was doing it, you could use the same logic to find yourself some good entry points and exits. So never try to sleep on those.
Yes, absolutely. Never try to sleep on any of that. Robinhood yesterday, wow, fascinating spike. I think high of day was $9.72 yesterday. Now pulling back a little bit towards the $8.80 level, I think, or if not a little bit lower than that. Sam Bankman-Fried saying that no, he's not trying to buy Robinhood. But again, I think just the thought that he might buy it, or if somebody else might buy Robinhood, becomes a real possibility. A lot of shorts covering their positions now. I think Goldman Sachs, I think it might have been Goldman Sachs yesterday, saying that they upgraded Robinhood to a buy. So I guess decent call there. Beginning of the day yesterday, after the news came out yesterday towards the close of the day, decent call over there. I think the moment markets are continuing trying to move lower, trying to break a low of day. I think I got out of my short positions there on that candle. Unfortunately, should have held a little bit longer, as we may just be breaking new lows of days shortly. But at the moment, I think that was a decent scalp moment. I'm just trying to make some very short trades over here. So far doing a decent job at it. For instance, when I see like 2 red candles towards downside and I see like a green candle up, I think that is my signal to get out of it. Perhaps the trend's changing. Perhaps we're going to see some more green candles, or blue in my case. And that's what usually when I see a trend change, a reversal, perhaps my way of doing it. And then that's when I start closing a position at the end of this candle here, when it's going to be confirmed a green candle. That's when I get out. The same is true when I see 2 greens, or 2 or more, I should say, and then suddenly a red candle, the end of a streak there. So at the end of this candle, I personally like to then go short. Here on this shooting star, I've been trying to. I decided to cover there a little bit too early, maybe, but now I think might be seeing a little bit more buying pressure as well. So that's pretty much my scalp strategy. I think, just to go back to what I was saying a little bit earlier, try to trade a trend. Don't predict the reversal, but when you see the reversal happening in real time, might be a good way to then have a low risk or high risk reward trade, where you have like a very tight stop loss if it goes back to new lows or to new highs, but you can just hold a position for a long time and hope for an actual trend change. It can be like a 10-to-1 risk reward, perhaps, if you have the stomach to hold it. Diamond hands, perhaps, something like that. In this market, I was talking to a friend of mine earlier, actually, and we were discussing options plays, something that we don't really trade here on the show. It's a bit too volatile. I think the spreads are also a bit too high for day trading. But he was telling me the other day, selling puts was something he was doing to generate cash flow in this environment. Telling me that just pick any stock that's remotely volatile and choose like a really, really far out of the money put or something like that, or even hold a stock and sell a call. It's not quite time for Danielle Shea's segment on Thursday, unfortunately, but one website I think I recently found that I thought was really fascinating for all you options traders out there was Market Chameleon's, or Chameleon's, I should say, implied volatility ranking. And this pretty much tells you the relative price of the relative volatility, or at least the price and volatility of stocks ranked by just how volatile the market believes they are. And from my observations, implied volatility is typically positively correlated with the price. If you see something like a GME scenario, you see the price of these options going, much higher, and higher. But I think a strategy I kind of wanted to do here, especially if you have paper hands like myself in your personal trading account, what I've been doing for a long time, just finding a really high implied volatility security and just selling puts against it, kind of like or covered puts. Got to make sure you have enough cash in your account. But suppose you have like a $5 stock or something like that, and you think that stock's not going to move $4 lower, or perhaps even better, perhaps you can pull up something like Robinhood at the moment. Or maybe not Robinhood. I know Robinhood's not very popular among a lot of the retail traders. Robinhood apes, I think, have a bit of a vendetta against it. But another low-price stock we can be talking about here, something that's pretty simple, Stitch Fix. This is a stock that's been down quite a bit. I think it used to be $100 or so. Now it's trading at around $5, I believe. But this is a stock that has a decent amount of implied volatility. I think a name that I've been looking at, if I can just pull it up on Yahoo Finance real quick. For me personally, if you think it's like a $5 stock at the moment, the trade I was looking at least in my personal trading account, was that you can kind of go somewhere else, say you want to do the third Friday, that's usually the monthly for these options, and just sell a low-priced put. Here, you won't see much of a bid on the $2.50 strike over here. But prior to learning more about options, I thought the only trade that there was with options is just blindly buying calls and puts if you think the stock's price is going to go up or down. But I think a lot of these trades, I think I would call them level zero options if you're hedging them fully with cash or with your securities. You can sell something like a 250 strike on the Stitch Fix put and earn a solid 4 cents per share, $4. But that's not a bad yield, I don't think. That's almost like 2% in the span of around 2 months. So you compound that, it ends up being something like a solid 20%, 25% over the course of a year. And you could say that Stitch Fix, likely wouldn't fall over 50% by August. So you can sell something like this put and generate a nice yield, especially in these tumultuous environments. Hopefully that's the right word there. My vocabulary is slipping a little bit. But yeah, so when when implied volatility is high, when you think stocks are moving about, you think it might go a lot lower, I think in the next couple of months, and take like a really volatile stock, sell a really low strike put. Worst case scenario, it's not even that you lose everything, it's that you just get assigned these shares at 250, which if you like Stitch Fix, that's absolutely fine. Just become an insurance company. I think that's what I've been trying to do in these times. And it's a strategy that a friend of mine has been telling me he was doing as well. So I give him praise for that. So hope he doesn't mind me sharing his strategy, but it's been a common strategy. Cash secured puts and covered calls. Great way to generate passive income in a high volatility environment.
I'm telling you, like that is like the best pitch. The way you ended it there was almost like a pitch, which was fantastic. By the way, I mean, we do this for free, and Tony killing it. Usually on Tuesdays, it's like a 15-minute segment, Tuesdays with Tony. You get him for the whole closing show. Sean and I, and the midday guys as well, we're equity traders. They trade the world, we trade equity only. So take advantage of when we get on Thursdays. We have Daniel Shea come on. We have Tony here today. Get your questions in, man, because he's dropping some absolute knowledge. And all we ask of you, literally, hit the like, hit the subscribe. I mean, if you want to, don't put any pineapple on your pizza. That's what I like to say because it's disgusting. but this is a free show. We don't ask anything. It might sound like he's selling a strategy, but he's not. We're essentially just telling you our experience for free. And all we ask, again, take 2 seconds, hit the like, hit the subscribe, bring your friends in there. Because what I love about this community is while we're sort of going waxing poetic, we love talking shop. I was trading a lot of Oxy today and liked the long. I didn't even see this, but look at it. Look at it just absolutely running away from that $60 price. So I said this morning, if it doesn't break 60, there's long opportunities there, and it bounces once again. Oh, Mike is like changed the bull to a bit.
Yeah, I think we have to. I mean, it's only appropriate. Mark Qs are down 3%.
I never noticed it. I don't notice the bull when it's a bull until someone says it in the chat. I didn't realize it was actually still on the bull. That's ridiculous. It should have been changed to the bear. But thank you guys for pointing out Oxy. I might be late to this. However, I don't see much that's as strong as Occidental here, and it's managed to hold that 60. I'll likely try to buy some dips. I was buying 61 dips earlier. We can see if we can go to that. GameStop, by the way, did press the VWAP after all, so it looks pretty strong here. Again, I usually like fading it. I didn't really see any specific news, but it did make a strong bounce while AMC was trying to go. Still need AMC above 1380 till I like that price. And once again, AGRX looks like it's coming to retest those lows. So triple top now. I don't want to buy those 250s again. I'm constantly holding on to a small piece of it every time I have the long, but I want to wait for VWAP here. Let's just try to get 235s, let it dip a little bit further. That's a pretty hefty rejection of the high when it felt like this was the one thing that was going to actually take out a top this afternoon. Doesn't look like it's going to happen at this particular point with this tiny little bounce that the market is getting, and this thing is starting to come off. But it's still in a nice upward trend. I still like it to the long side, but I don't want to be getting in too early on that little bounce back. We'll wait for those 30s, 35s so we can get them. AMC, like GameStop, still trying to move to the upside here, but you had a wick top at that 1380. That's a pretty weak sign. I want to see it get above and hold above that price, or at least at that price, before I think I want to get in. I would have thought this would be stronger than GameStop. Clearly wrong about that. And I see a new one in there from you, Playmaker, IFRX. So the caveat always being, if you guys give a random stock, this is my first time calling it up on the day, so I am completely blind. I'm not going to pretend and sit here like, oh yeah, I know the news here. I have no bloody clue. I'll double check when I can if my charts didn't just explode on me. But all I can tell you is it is breaking its weekly range to the upside. As a matter of fact, it's at there right now, 150. It just attempted a break of its weekly high, and then it just rejected that breakout. But I don't know. Brendan's saying there is no news on it, so it could just be a low float runner making a technical breakout. A lot of times when it gets to the next level up and has no catalyst, unless the short float is huge, it's probably going to reject that price, which it seems like it's doing right now.
No, attacking RTKT, I can't really pronounce it. This name has been unhalted recently, I think about 2 minutes ago.
Did it open?
Yeah, flushing to the downside a little bit here, not as much as I thought.
Shocking.
It's down around 12 cents, I think, from the pre-halt, which was around $1.80. Now open, I think it hit a low of 162. But if you look at the time sales over here, I think it's recovering quite nicely. Very low volume, not much being traded at all, which is kind of surprising because TCAT was a major NFT play, I believe, back in 2021. The start of it, I think, getting swept up in the GME rally. This stock, I believe, was $41 or $45, something crazy like that, not that long ago. You can zoom back here on the weekly and see exactly how high it went. Yeah, wow, higher than I expected. This thing was $70 at one point back in March of just a year ago. That's crazy, wow. But yeah, this stock, by the way, now optionable. You can bet on calls for a name like this if you are so interested. This thing had a fair bit of a squeeze. I think the first time it went from around $4 or $3 all the way to $70. And then, you know, it pretty much faded back down towards close to $5 before rallying once more to around 15. And I think in more recent times it tried for a third time, not very strong. I think about $2 all the way to close to $5. But now as they're doing a shelf offering or a share offering, or just share sales, sorry, I didn't quite look at the news there. We are now seeing the bid-ask at $1.66 and $1.67. So this name could be dead in the water for a foreseeable future if it continues like this. What's not dead in the water, however, is the Qs as well as the rest of the markets. Looks like it got out the right time over there as we're trying to move towards the upside. Maybe it's not sour hour after all, as we try to be less than try to be down less than 3% for the day on the Qs and 2% on the S&P. Looks like we might just head that way if we start breaking above the relative, I guess, high here. If we start breaking above this level at around 285 on the Qs, corresponding to about the level of the 383 on the S&P or the SPY, I think that might be a very strong catalyst, or at least on a technical basis, towards the upside. That's something I would like to pay attention to. And I think if we do break that level, I will be along. Hopefully that'll be a nice reversal to end this Tuesday. And yeah, maybe a nice reversal there, perhaps being green on Wednesday. I think after a large move, no matter which direction, 3%, something like that for the Qs, 2% for the S&P, the day following it, you just kind of have a bit of a reversal, at least at the very opener in pre-market even. So if we're down still around 270 or sorry, 2.7% on the Qs as we close at this range, I would, you know, in my personal account, I would long the Qs at the end of the day today and sell it sometime in pre-market tomorrow. I think, you know, once Europe opens, once Asia opens, they'll see that the Americans, or at least us here in the West, tank the markets quite a bit, and they'll have to adjust to a little bit. You'll see some buyers seeing that it's a huge discount, perhaps buying it up a little bit. So it's a trend I've kind of noticed, kind of going off of what happened last Friday, and now what happened, I think Monday heading into today as well. Bit of a reversal. The markets doesn't move in a straight line, and so I believe we are due in for a bit of a you know, a bounce here on the indices.
Yeah, it feels like, I mean, I got Arun's levels here, and someone asked me, I think it was Mike in the chat was saying, what are Arun's levels? And he said that his support was pretty much at 3,800 on the ES down to 3,770. So it's a bit of a wide range, 30 points. I mean, perspective to the move we've had today, maybe not so much, but either way, it looks like we're trying to hold that bottom. Oh, these wicks are annoying. Amazon, it's going to be hard to tell, but Amazon 107 has been holding pretty nicely here. It's got a decent bottom, and it's trying to break out, but you still haven't taken the top end of the channel, like 108, that dollar range. It's still barcoding. So as you're getting this bounce, you're not taking out that second level like something like a GameStop has done, something like AMC, which it looks like it's getting really close to doing. I might just straight punch AMC if it takes 1385, to be honest with you. I just think it has a decent chance to be able to do that. GameStop looks like it is going to make a nice tight consolidation here. It has a shot for a breakout on its own right. I don't know how much I trust that break, quite frankly. So you're going to count me out of a GameStop break, especially when there is no catalyst. It turns out the reason why DWAC did this, and I had to ask Brendan, and Brendan basically said the news was that there was I guess an uptick in usership this morning was the news, and for whatever reason there was a late reaction, and DWAC went up 10% and then just came all the way back down. Just this stock at this particular point, I can't remember the last time it had a spike that didn't get instantly faded, and that's what we've been seeing. Liquidity non-existent, And every single time buyers come into it, they just sell it en masse. And that's what we've been seeing over and over again. Agrx, no reloads at 250 that have been good. Said wait for VWAP. Looks like that's going to be able to play out. This might give it up at some point, right? Like we could break this 230, which is our afternoon support. If it does, fair enough. But at least I won't have added back at 250. I'll have bought back into it at 235. Give myself a better average price in case this trend does eventually give itself up. Nothing goes up forever. Nothing goes down forever either. Sometimes when you go back to the well over and over again, your last trade can be a losing trade. But if that's what happens on AGRX, perfectly fine by me.
Absolutely. And I was seeing in the chat some people I think disagreeing with my sentiment that we were doing for a bounce, as they were saying, no, there's blood in the markets and we're going to continue that way. It looks like they're certainly right at the moment. I don't see a bounce coming here at the level I was talking about, 285. Not getting taken off. We weren't really close anyhow, and now we're starting to see red candles on the 5 minutes. I'm going to reload my shorts here on the S&P and on the Qs. I think we're doing for perhaps lower lows for today, maybe even a new daily low as we head into the close. Again, I think my thesis stands for perhaps a bounce overnight. Usually you see those kind of things. It's actually kind of funny. I was reading this statistics the other day. They're talking about, since this was a little bit dated, I remember reading this about 2 years ago, but it was like there's two strategies you can employ, or at least the study employed. One was that you bought the S&P at the beginning of every trading session, 9:30, and you sold it at 4 p.m. of the same day. The other strategy, you buy the S&P futures right after the market closes at 4 o'clock, or you just hold it overnight. You buy the S&P right before it closes, and you sell it right at the open at 9:30. So after running these two strategies with a back test over the course of 20 years, I believe from the year 2000 up until 2020, the strategy that included buying the intraday, buying it at the open and selling it at the close, yielded a return of negative 22%. Meanwhile, buying at the close and selling it at the open yielded about 680%. So you think about it, that's kind of fascinating how Europe and Asia is responsible for most of the gains on the S&P. Now, I haven't done my own back testing into that strategy, but I think it was published by Financial Times or somebody like that. I thought that was quite fascinating. And if you're a futures trader, you might notice that more often than not, the S&P is in fact up. And some of the worst, I think, crashes usually happen during American market hours, at least for the S&P and the Qs. So, I think to go off of that, I think a trading strategy I was trying to employ was see what happens if you just buy the S&P on the close of a really bad day and see if it opens a bit higher to, before next morning, and sell it right after the market opens or right before.
I think I remember that article.
Yeah, it's quite a fascinating thing. It's like, that's why a lot of these algo traders, I think, have been doing quite well. So a lot of data analysts as well. I know, financial sector's hiring a lot of them. It's just quite interesting just have a huge, data spreadsheet and just like diving into the nitty gritty of everything and finding these weird correlations that people don't really, observe in real time. But, once thinking about it, once diving deeper into numbers, it's like, wow, can't believe that's a real thing there. That's crazy. But yeah, that's an interesting strategy, and I think that's what I'm trying to employ in my own trading. Imagine just buying S&P calls at the end of every session and selling it as soon as the options market opens the next day. I think I gotta try that with one of my trading accounts.
Why not? I mean, that's an interesting strategy. I think I'm pretty sure I read that same article. I see someone asking what, I assume you mean KZR. You might have typed KRZ. I'll assume that's a bit of a typo because KZR is what's moving today. This was actually on our free watch list this morning. Kazar, I want to say, Kazar, they had positive data release on their kidney drug. However, this was a simple case of ran in the aftermarket, tremendously. Anytime you see this, that kind of a run in the aftermarket and then a dip down. Look what happened not even at the open. This is actually at 8:30, where it rejected the aftermarket high, consolidates lower, the exact head and shoulders, and then gives it up. Usually that stock's done for the day. That's a pretty weak move once it fails that price area. So all you're seeing off $8 is, I guess, a bit of a relief rally. This stock has been getting crushed. It says up 50%, and yes, it is, but it's been getting crushed pretty much all day long since the open. And to boot, whenever you see and I'm making the assumption here, I could be wrong about this. I always assume this is true when I see a biopharma that has moves like this, and this is the news and it moves this far, that this is probably the biggest drug or the only drug in the pipeline, just a guess. But when you have a breakdown, essentially likely on the exact same drug, probably having negative results, at 1150, and then it makes a big, huge break, where does it terminate? Exactly where everything fell apart the last time. 200 period moving average, no coincidence. Support at 1150, no coincidence. And that's where it rejects at the open. So you have three reasons, well, maybe two reasons why you would have liked to short at that price. I don't know why I wasn't short this stock up there. Kind of no good reason at all now that I look back at it. But you go and look at that daily chart, see exactly where it failed a couple of months ago, see where it terminated in the post market, and see where it rejected. All at $12 and all pretty easy to be traded. The only caveat there is there wasn't a lot of liquidity on this thing, I would presume, pre-market, and very difficult to trade, especially not every platform allows you to use stop orders, which in this particular case, you probably would have wanted to stop in case it took that $12 level. So if you can't use stops in the pre-market, sometimes it can be difficult to get out of your trade, especially when you're doing a few things at the same time. But that was a pretty easy rejection. Decent volume spike on that bounce. So I'll be interested in this $8 level because that was ultimately good news. So if it starts to hold $8 for a couple of days, there could be a secondary rally in this. You shouldn't throw these away from your watch list or your quote board just because you had a monster pullback today. It found a bottom. If it holds that bottom, it's still a positive catalyst, and you could get a second push up. But these low floaters, it's not always about day one. Sometimes it is day 2, 3, and 4. Like Revlon. Like Revlon wasn't a one-day story. Well, I mean, there's a lot of examples of it. Revlon's the first one that came to mind for some reason. I have no idea why.
Oh, Revlon's been a big name, absolutely. I think the only other one I thought of would also with Dara, and that's I think Redbox, multi-day runner there, $2 all the way to around 14, mentioned many times in the chat. I think, forgot who it was who mentioned it, but talking about the short interest at 180% on Redbox back when it was like $9, and I think she was asking, it's like, do you think it might run? I know the short interest is really high, and I was thinking like, wow, that's pretty crazy. I don't think we've seen those numbers pretty much since GameStop. I'm sure there's a few names over the past couple of months, but that was a great call by one of our viewers, and it went to 16 the next coming few days. Anyhow, I'll pass it to Brendan real quick.
WEJO starting to go again. We talked about it very briefly in the pre-market this morning. There was a headline on this company with Ford, teaming up with Ford for some work in Europe. So just a heads up, another little one starting to rally here.
Oh, I like that break. So, I mean, a couple of things. I mean, I know he just said the news, and I remembered from this morning, but I like that break that it just put on at 145. One of the reasons why is, just quickly, if you look at the base that this had, above $1, it's been essentially basing out here. It tried to make the break of this level here at about 160 in the morning. But if you look at this, like sometimes these pre-market levels, if you just sometimes say to yourself, what if there was no price action in the pre-market and you could eliminate those candles? Then what you have here is still an uptrend off of that low at 115, and then you have the post-open high at 145, which is right around where that consolidation was. So if you throw out the pre-market, when most people weren't still trading, you'd say, this didn't happen. Well, you had the nice uptrend off of that support. You're breaking essentially a double top, which coincides with the resistance on the week, and you have a positive catalyst. So that's actually a pretty good look. And this is another reason why sometimes the charts, it's not that they lie to you, because that's not like, there was actual volume happening in the pre-market. But if you get away from that and take a step back, or look at the 15-minute and just say, okay, well, if I throw all that away, and look at the price action after, that's a pretty clean break. So if it can start to hold this on any kind of a dip, and I'm looking for something that can rally, because I don't think any of these big caps are going to give the moves I want. Like, we're going to get an early look from Financial Juice of what the imbalances might be on the off chance they could actually move the market. I'm not feeling like we're going to get anything significant. So I'd rather be looking at one of these small caps to get going, whether it's AGRX again or playing a break here, or maybe AMC, which is failing now, can get above that 1380. That's what I'm kind of more juiced for, as opposed to trying to figure this market's going to give me a bounce on a buy and balance, or I can short something at the low of the day with 20 minutes to go. We have to be flat at the end of the day at Day Trade the World, which simply means we cover all of our trades by 4 o'clock. So with that kind of a timeline on it, I'd rather something which is moving that could give me an entry. This has to only pull back 5 to 10 cents for me to like an entry point here and maybe catch something in this WEJO. Turning around, not always a bad thing, because it allows you to get in on a potential trend. I can hold this hopefully to like 350 if it even comes down and gives me the entry point. But that's what I'm looking for. Not necessarily trying to pick a bottom on Amazon or any of these other absolutely crushed big cap names today, because it's just about everything. Occidental was probably the missed opportunity, because I think that was the chance to sort of go off off schedule into something that, oil markets were closed, but it was holding support. Just take it when it breaks out of that support. So kudos to anybody that called that one out. I know some people were calling that one in the chat as we were discussing other things, but that's one we were on this morning that I could have gotten back to. Outside of that, I want some of the small caps here, because I feel like that's what's going to give us an opportunity in the last 30 minutes here.
Yeah, absolutely. In the last 30 minutes, or I think closer to 20 at this point, as we await the imbalances coming out at 350, I'm holding short on the indices. I think we might see a bloody close today. I think someone was saying in the chat, I think it was Mike, imbalance at the moment, early MOC, 51 million to the sell side. So yeah, not a very huge number actually. I was expecting a lot more, seeing that the Qs are down close to 3%. That being said, I think we are close to day's lows. I don't think we quite broke above the previous levels I was talking about here, so I'm going to be short heading into the close. And for now, I'll pass it back to Brendan.
There's a note from the, who is it here? The US CDC apparently activating their Emergency Operations Center for monkeypox, guys. So SIGA on a big move here, up 4%.
Wow. Like, make up your minds on this. Like, the WHO was like, yeah, it's monkeypox isn't anything, and now you get whatever, man. It's just, I feel like we're all over the place. My gut tells me that, based on the fact that WHO was basically saying this is nothing the other day, would be to fade this kind of a pop in SIGA. But, I don't have anything until about 12. Like, I don't even know if I'd pay for shorts at this point because I'm not sure it gets to 12. I suppose if it spikes another 30 or like really quickly up here, I might look to pay for shorts because it only takes a few seconds for us to be able to do that at Day Trade the World. But I'm not going to pay for them now when it's not even in the target zone. It's already reversing off of 60s, and that's diddling in the middle, which I hate doing. I just think you get a bad price in that particular case. I'm not going to do it. SIGA, $12 looks pretty juicy to me when I pull it up there, but that's for a short play. Your longs would have been off 11. That's come and gone. But I do have to go back over to Robinhood. For whatever reason, hey, look, it caught a bid. The trend is still fine, but it can't hold on to it forever. I'm going to put a trail on this thing at $9. If it breaks 9, then I just got to get out. I did cancel my stop above the high of the day. It's not going to be getting there, but I got the trail on. I don't think it's going to hit all the way down at 855 either, so I'll have to get this bid a little bit higher, up to 880. But sometimes there are just trades where you get an entry price, you're long at the bottom, you're short at the top, and then you just want to hold on to it for the entire day because you've got the momentum in the right direction. And I don't think there's anything wrong with that. And sometimes, and I'll admittedly say this with AMC, we were going long AMC pretty much all day yesterday, and then when it was still above that 1380, I was just long until it was the extension of yesterday's trade. I was just long in front of that price until it broke. And to me, like, that makes total sense. Like, we're day trading, so we can't hold it overnight. But if your trend is still valid and your levels are still good, and the only reason you got out because it was a close, well, I'll just jump back into it the next day a lot of times. And it worked for a little bit until it finally broke down. But, it holds that consolidation. Maybe you have a stronger market. I think we could have tested 15 again on AMC. I did just get back into AGRX, so patience is a virtue, and thankfully we had some of it there. I'm going to leave it on the 15. So bouncing off that 230, instead of paying up to 50s, I waited for those 30s because I wanted to minimize the amount of risk in case we break and hold below VWAP, take out like 225. Why load back into this 10 cents too high? Just wait for it here. With 20 minutes to go, it's this or WEJO, which is not really pulling back at all, so maybe it is pretty strong. WEJO holding at 150. I wanted a 145 entry.
Absolutely. And I just want to give a shout out to Bic S giving us a super chat asking you, Neil, whether or not you would hold Tesla puts, whether or not I think our viewer here, Vic, should hold his Tesla puts, his or her Tesla puts into tomorrow. Any thoughts on Tesla?
Look, my thoughts, and I think I might say the same thing. First of all, like I'm not a person that ever believes in, like I'm a day trader, so shorting things overnight, like swing trades long. I think there's always a ton of risk holding anything. I think you're playing it right by going with puts at least. Like you're not holding a stock overnight short, which I always tell people I hate doing that. I think it's actually really risky. Tesla should be going, I think Luke even said this too, and I said this already. Tesla should be going to 680. I'm actually a little bit surprised that we didn't get to 680 today. It held up at 700, but that's just a round number as far as I'm concerned. And maybe it's because the market caught a little bit of a bid. But the reversal that we've seen overall today, that kind of a rug pull, doesn't feel like a one-day type of an event. Like it does feel to me like the ES is holding up where you'd expect that consolidation. But when you get a rejection of that break, it just feels like we want to head another leg down, and Tesla's relatively weak already. And it didn't even get to its next support level. So I got to feel like I'm going to probably come in tomorrow thinking about shorting Tesla the stock. So it's hard for me to tell you not to let it ride a little bit there. To the extent that you can always take some profit, I don't know the situation of your trade. Maybe you could have scalped them out, like who knows how aggressive you were. But realistically, I do still feel like we are headed down. we're in a bear market. So when you get these rejections of breakouts, it's not usually one leg to the downside. Usually it's more than just that. And Tesla does have some room to go. There's buyers at 700 because I guess they like that round number. But overall, I do feel like we are headed back to that 680. I could be wrong about that, and I won't have a chance to do anything about it till tomorrow morning. And if we're sitting at 750, sorry, but that's just what I see when I look at it.
Yeah, I absolutely agree. I think holding the positions overnight, it's always just really risky because there's like a huge window and you might see the market move against you and you just can't close your positions. And just like, you're biting your nails hoping that the market's at least somewhat in your favor by the time you wake up the next morning. And when the market's open, that's always the issue with options where it doesn't really have a pre or post market, just trading from 9:30 to 4. It's been a while since I was trading Tesla options myself, but I remember back when I was trading it, I noticed the implied volatility, especially on some of the weeklies or anything within like 30 days to expiry, was really high. It was like you hold it overnight and suddenly just, even if the markets don't move, it opens at the same price the next day. Boom, your option's down like 10, 20% just from the erosion of the time value, the premium on it. So, it's better than holding a naked call on, or shorting a naked call on Tesla, definitely. I'd say that you're holding something that can't go negative. But yeah, be careful on the erosion of your premium there. It's not just a bet on the price of Tesla, but also a price on the volatility as well. So if it does open flat, by definition, since there's less time left on the option, you're already down. So just be careful on that. I'd only hold puts if I had like very strong conviction that the markets would go red the next day or would open red, especially with Tesla there. So yeah, just be careful on that position. But yeah, definitely better than holding naked calls, though, I will say, because there's nothing more nerve-wracking than having a position that be unlimited losses against you. I think the more you trade, or at least this is what I found, the more I've been trading, the more I stop thinking about what the best possible scenario is and I start thinking more of what the worst possible scenario is and how to prevent that. And so I think when you're holding, a position like that, you always think about not just the potential gain, but what happens if Tesla, opens like $20 against you, like someone saying, I think it was Scott in the chat, Elon's unpredictable. He could just release any news in the after hours, and just like that, your options might be worthless. But thank you again thank you as well to the Playmaker88. Show my tweet to Neil, I love you. Scott, nor couldn't. I'm not sure if I understand the reference of this trade. Unfortunately, I don't think I've been really paying as much attention.
I'm not sure what they're referring to there. I mean, I quickly went to check to see if someone sent me anything, but and then I saw something else because someone tweeted at me. There's like four accounts impersonating me on Twitter. Oh, we all get this. Sean gets them on time, gets them on Instagram as well. Just remember one thing. None of us will we'll never try to sell you anything. We're never going to reach out to you. We do all of our best to try to answer DMs to the best of our abilities. It's a hard thing to do because we are live during market hours, so I'm not very good at getting to DMs. I try to do it on the train or in the morning when I get a free moment. But we will never reach out to you. We will never try to sell. Do not send us Bitcoin. If someone's saying that, it's a fake account. We get a bunch of them. Please report them. Let us know if you can. Yeah, that's just not ever going to be us. But apparently there's a bunch of them on Twitter impersonating me there. So just be really, really careful. All of us, we're never going to sell you anything. It's part of our mantra here. Like, we don't charge for the show. That's what we're all about.
Absolutely, and not to take it away from you, Neil, but that just reminded me, there is like a scam going on Discord. I'm not sure if I can find it, but it was posted on Reddit as well. Here, if I can find the post. I was on Discord the other day. I was part of this trading channel, I suppose, and there was pretty much someone saying, as part of the server sponsorship, we're giving you, I think, 0.35 of a Bitcoin or something. Just register here. And if I can just find a post, somebody actually detailed exactly what happened here. Very popular scam, I think, going on Discord these days. The exact message: congratulations, you've been randomly selected for the giveaway. Register account here. And this person actually went through the process up until the scam happens. So it gives you this fake interface thing that was stolen off some actual exchange. It says you have the Bitcoin here in your account. And to withdraw it, you just got to confirm your identity by sending them $300. Now, how $300 ends up confirming your identity, that's beyond me, but I guess that's how the scam works. So, to make half a Bitcoin or close to half a Bitcoin, you send them $300. And, obviously very, old-fashioned scam here. So if anybody's trying to give you free stuff, always beware. If you didn't enter any contest and someone says you want a contest, well, just be careful about something like that. More than likely a scam, so a lot of them popping around. Gotta be careful with your money. So just to add to that, be careful of impersonators, be careful of scams. Very frequent, very commonplace, and unfortunately very frequent in the cryptocurrency industry as well. So always be careful.
We only like one word I like. I actually heard this from Rogan and really loved it when he said it was we all have limited bandwidth. Like you only have so much bandwidth. It's like time in the day or time to actually spend time thinking about stuff. So every single moment that these scammers waste on you that you have to think about, we hate that. So please also report them. Like I said. However, this is the caveat. If you feel inclined to mess around with a scammer, just to sort of get them back and you got free time on your hand, I always think it's hilarious, and I love hearing the stories. I know a few of you have told me about it. It's like, wow, there was a fake you that tried to do this to me, and then you'll DM me like the conversation just so I can be amused by how you scammed them or wasted their time. I love that crap, man, because there's some good ones out there, like the whole, someone calls you and then you pretend that they called a crime scene.
Oh yeah,
that's like my favorite one of all time, and I've been kind of sheepishly hoping that someone will give me one of those prank calls so that I can try to pull a scam like that on one of those calls. I don't really get them anymore, so I guess that no-call list in Canada isn't all bad. Before we go to Brendan, I'm starting to get out of this trade on AGRX. I caught the bounce here at 235 off VWAP, but it's not going anywhere, and we're running out of time, only 10 minutes left, so I might just have to get it out for 5-10 cent wins. If that's all I can get, that's all I can get. Same thing with Robinhood. Brendo?
Just watching Pinterest, there was a volume spike there that took it down to day lows, essentially. It didn't actually break that low, I just noticed now, but 5% anyways. Apparently, The Verge reporting that Microsoft has a similar capability or is coming out with an app that has similar capabilities, essentially a Pinterest competitor for Microsoft.
Oh man, like if it isn't, the big boys aren't getting killed enough. Just this morning I was reading about, there's a couple of firms, and I forget their names, apologies, firms in the UK that are jumping into the buy now, pay later, but on the actual, not on the consumer side, but actually at the business side, right? So business to business, because that's an actual bigger market for small to medium sized companies, and it's just further consolidation and further competition, but also addressing a bigger market, which is going to just again hurt the valuations of a firm. I should have been short a firm today. So Pinterest, not a lot of good reasons or good things to say. My daily chart doesn't want to load up, but I mean, who cares? Like, this has been an absolute dumpster fire the last couple of days as well. You throw this piece of news, it's failing a breakout at 20. We get this in front of 20 tomorrow. We'll probably be looking at that for a short trade. At least I should say I don't want to put words in Sean's mouth, but I know you'll probably like that one too off $20. So we'll see Pinterest for sure. Going to add this one to the radar. We have 20 seconds till the imbalances come out. So A, I want to start to get flat, but B, I want to make sure that I'm locked and loaded, ready to see if anything does happen here. Very small sell imbalances indicated. So I don't think we're going to see much. These are just the ones from this morning. But in about 5 seconds, we will see what the imbalance have in store for us this afternoon. What do we got? Yeah, not BAC, 3 million to buy, so it looks like just the banks here. Apple's a 1.1 million to sell. Bit of a nothing burger, I'd say. BAC is a standout. Nothing really big here. Apple, small sell. Nothing over $1 million. Meta, very, very small sell at 500,000. So as expected, very small imbalances here today. Bit of a nothing burger, so we can go right back to looking at the names that were moving and giving you opportunities. Just to go back over the one Brennan brought to us, that WEJO. I still like the idea, but with only 10 minutes to go, I can't really buy that dip. It is finding support back at 145, but there's not enough time for that trade to work out for me. And it's the same thing with this AGRX, which I'll just get out of all of it. Gonna end up taking a 7-cent winner on AGRX. Robinhood, I'll probably just have to cover as well. It was good all day long. Forget about this bracket. It's entirely possible Robinhood just came out with a slight buy imbalance and spiked 3 cents on me. But I'll just pop on the bid. It's just like that. It actually filled the bid there at 91s. So I'm going to be all flat, get out of those trades, nothing burger of a close in terms of the imbalances. However, the market is still trending to the downside. So we are still seeing the NASDAQ taking lows, the ES taking lows. Like if you were seeing in a money short that's moving, yeah, hold on to it. But I was looking for those small caps long, small wins on them, but they were the only things you could be bullish on today. Even GameStop put in a power move, which relative to AMC I didn't see coming, put in a power move, rejected VWAP here, and has already pulled back $1.50, and its volume is starting to taper off as well. So even the strongest names going into that close are reversing pretty heavily there. And the playmaker, you're saying Kidaboga, Kidaboga, and so I guess What is that? Like, why is everyone typing that?
I know he's a YouTuber. He pranks scammers. Those call center guys.
That's my dog right there.
Yeah, gotta check him out.
Hold on, sorry, I'm gonna put it in my browser so I actually remember to look this one up, because if somebody's out there pranking dudes, scammers, then I like him already. So Kid Bogey. You can tell I'm not hip because I don't have much time when I get home. I basically just dab when I get home. So what little free time I have, sometimes something amusing like scamming scammers. Hey man, there is nothing like karma.
That's
Principle is priceless and karma is gold. So I'm all about that. So I'm going to check this guy out. Thank you guys so much, because you probably just made my train ride a little bit more amusing after I do my Wordle and my Quirtle and my Nerdle on my train home. I do all three.
dang. Train home. Sounds like a fun experience. You said you take the Go, right? So maybe a bit more of a pleasant experience. I take the subway, so it's always rocky on the TDC. But yeah, anyhow, like you were saying, muted reaction to the closing imbalance. I exited my position, I think, on the Qs on the S&P. Yeah, just a quick scalp. I don't know if I have too strong opinion as we head into the GDP numbers tomorrow. Someone saying, moment of truth, is arriving tomorrow. We shall find out whether or not we are actually in a recession. Kathy Wood today again saying that she believes we very much are in a recession. Doesn't change her investment thesis, however, still investing in a lot of cash burners. But yeah, fasting to see what happens tomorrow. I think it's going to shake the markets huge. I would say something like, if it's down 3% today, just buy it and sell it tomorrow morning. Might not work if there's a huge catalyst coming tomorrow morning. If it's, if the GDP number is awful, I think the S&P can just gap a couple percentage points to the downside, and that's always scary. If you trade a pre-market, that's great. If you only trade during market hours and you're holding a position overnight, again with your Tesla calls, I think Bick was talking about, gotta be careful with that, because I think the number is going to shake up the markets quite a bit. So it might be more of a news play than a trading technical side play. But yeah, as we head into close, we have 7 minutes left. I think I'm done with my index trades for today. I think overall not bad scalps. It's for markets like these, you usually see the huge move happening right before 11 o'clock, around like 9:30 to 10:30-ish. But for the rest of the day, it's kind of muted. We kind of broke towards the low of days today as we head into close sour hour, more like nothing burger hour, I think someone was saying there. I think times like these, good for scalping, but obviously if you're trading the first opening hour, 2 hours of the day, gotta be able to have those diamond hands to commit to your position, because someone like me, I'd be getting in and out of these positions, missing huge moves. It's hard to add to a winner. If it's hard to buy into a stock that you sold out of moments earlier, and at a much lower price, and having to buy in at a higher price, thinking about all those potentially lost profits there, always hard to do, but it's something I've been more accustomed to doing since, again, joining trading floor. You got to find the easy part of the trade. Finding the reversal, that's a hard part of the trade. Being able to call the top, or catch a falling knife, you're able to successfully do it. That's incredibly hard to do. But trading the trend, buying the high of day, sell the low of day, I think that's something just to be done in this market. I was talking to Ian the other day. He was saying, I think, if only I had the decision to just walk into the office, press the sell button, and just come back, as the market closed, and just hit the buy button again, I'd be making money 4 out of 5 days, be up quite a bit more. So yeah, I think in this market, just got a diamond hands. I think your position, either we pretty much rip for a day, or we pretty much tank for a day. If you see a reversal, it tends to happen, I think, in the first 2 hours or first hour, and that certainly was the case today. But anyhow, heading to GDP tomorrow, be careful holding any positions overnight, just because the markets are going to open much higher, much lower, I feel like. In my opinion, I think if we do enter a recession, or even the number's terrible, I think pretty much the market's pretty much baked it in at this point. Q's down 3% today, obviously in anticipation for what's to happen. We might see a bit of reversal tomorrow morning, but that's just my guess. But I do think we are entering a recession. We'll see what happens tomorrow morning.
Tony calling the recession too. Look, I mean, obviously, there's a lot of people that are going to use that word, and I think we're seeing a lot of signs of it as well. But I just found out that we're going to have Randy, the Ranster himself. I don't know if Randy's going to be in jorts, but he is going to be ringing the bell. So we do look forward to that. By the way, I mean, Tony doing an unbelievable job here, dropping signs. Like I find myself when you're on sometimes. Usually I'm looking for trades. Like when Sean's talking, I might be managing trades, looking for things, checking out my charts. But a lot of times I'll get caught up, just kind of like listening and kind of being caught up in the mystique there, and also dropping a lot of knowledge, which I think is important, because we'll always focus on the trading and sometimes too short term. and then lose sight. Like every now and then I'll remember to think macro, but a lot of times we get Tony in there. It's definitely refreshing, but it's criminal that we don't get 1,000 likes when we get Tony for the entire close show. So I'm a little disappointed in that, quite frankly. We do have a few earnings on the board, and I do believe we are ready to go to Brendan very quickly because there's at least one name. There's at least one name out there that I think we want to pay attention to for earnings.
Yeah, if you missed it, if you're busy today, maybe you missed it. Here's what's up for tonight and tomorrow morning, guys. BBBY tomorrow morning, in fact.
Yeah, and the reason why we care about this is in this market, anything that has significant short interest or has been leaned on heavily on the daily chart, capitulated a few times, where shorts might have to think about covering, that can be a pretty good catalyst. We've definitely seen that. We know it's a chance for a big move when it does that. $7 level looks pretty spicy. It failed to break at that the other day there, but like everything else, pretty much crushed today. Not a lot on that earnings front. We're gonna be all over that GDP when we get that this week. And the other thing that we forgot to mention: don't freak out when you see Shopify's price tomorrow. Just remember the split is effective at the close tonight. So yeah, Shopify is going to have a split. Try not to freak out. It's the price is obviously going to adjust when they do that split. 2 minutes to go in the session. Not a heck of a lot happening. And just one thing I want to point out very quickly: what is the heck is these wicks on AMC? Like right at the end here, there's wicks down to 1230 and dark pool wicks up to 1460. But AMC, that 1380 support price that we're long in front of in the afternoon and that we tried long in front of, it just turned on a dime, and when it rejected that price in the afternoon, it just slammed back down to 13 even. So, that's a clear line in the sand for me. I'm going to double down. I have that level written down on my iPad anyways, but yeah, 1380 is a big one for AMC, clearly, as it just ran away from trying to break out at that particular price. Looks like it's a short at that level for the last couple of days here. Only 1 minute going into the close. Any final thoughts there, Tony?
Final thoughts, not too many, other than the fact that we're closing at the low of day. So it'll be very fascinating to see how we open tomorrow. I think someone was saying in the chat, green pre-market, and then it's going to crash or at least go red in the regular market session. I think that's a decent thesis to have. The market these days favoring the downside. I think in terms of like where we are in the cycle here, we are currently in a downtrend, I think, marked by what happened today and yesterday. So I think we will start seeing a move downwards tomorrow. But as for what happens pre-market, it's to be decided. I think green pre-market and red actual market session could be very likely.
Ooh, yeah, like that. Look, I kind of think the downward trend is continuing. But when we're this weak, let's be real about it. When the market is this weak, then we got to be concerned. I don't even see Randy, yet we're like 10 seconds away. So I don't know if someone's sprinting over to the bell, but they better get there pretty quickly because the countdown is on, and we are in 5, 4. I should just throw something at the bell because I don't know who's going to get it really quickly. 2 and 1. I don't see Randy. There it is. Thank you, Liz.
All right,
ring it, Liz.
Got to ring the bell. Nice.
So special thanks and shout out to Liz sprinting away from the desk. Liz is our social media coordinator. So all the awesome stuff that you see, TikTok, Instagram, that's all her beautiful mind there. And clearly, I don't know where Randy is. You know what, though? I do know where Randy is. Randy's gone, man. Randy probably already took off to hit the road to get home. That's why he's gone. He's in the jorts. He's out of here quick time. Market ending on those lows, but I do believe I don't know if it's working here yet, Brendan, because I see flipping back and forth. We'll get to you in a quick second to see how things did end up. Although we use that word pretty loosely, we did have to flip over to the bear today because the markets gave it up. And believe me, this morning, it looked like we were heading upside. There was a positive, looking at a lot of breakouts, and unfortunately we had another one of those rug pulls, but that's a bear market for you. That's what you end up getting here, guys. But let's see how things ended off officially, Brendan.
It is, as you said, bear market. Typically bounces get sold, guys, and that's what happened. It was that consumer confidence number at 10 a.m. that kicked it off, but yeah, right there. 3% for the NASDAQ composite, 3.09 for the 100. Leading the way to the downside, 2% for the S&P, 1.5% for the Dow. Even small caps getting crushed today as well. So ugly right across the board.
It definitely wasn't pretty, but like there's always trading opportunities out there, and that's the thing. That's what we go over. You're going to see the trade of the day when you stick around for that. That is not going to be about the biggest winner. It's going to be about how we could learn to maybe spot a reversal, and then Disney was an opportunity there. And there was a lot along those lines where you had to just give up those longs and look for that reversal to the short side, even on the relatively strong stocks. But I just want to give a quick thanks, of course, to Tony doing a fantastic job filling in for my main man, Sean, who is at his son's graduation going into middle school. So I know he's enjoying that for sure. We look forward to seeing Sean back, killing it again this morning as always. Big shout out to Lucas, who's been on the ones and twos, getting some help from Maggie, getting some help from the IT group, but doing a lot of it by himself this week. You saw Liz, she rang the bell, doing her social media work as well. And I don't know where Maggie is, but she's been doing a fantastic job. The midday show, they've all been killing it. Trader Prad, Luca, Ian, all keeping it very real during the midday show. It was a tough day for day trading, but they definitely powered through it. So big thanks to everyone there. And of course on the big desk, on the ones and twos, we have Brendan, always making sure we have our ear to the ground and getting all of that news. As always, rounding this one out, I have to do this. It always gets in my ear at the end, and I hear myself talking. But as always, guys, this market is going to give you opportunities. Don't get married to one direction. Do be willing to just trade the price action and take what the market gives you. We will be here every single day that the U.S. market is open, which means on Friday when Canada has a holiday, we're here for you. This is Trader TV. We'll see you at 8:30 tomorrow morning. See you tomorrow.